you getting massive value so that you understand, as we were talking to Simon just now, just early on, is that it's all about putting the theory into practice and in real time, not in hindsight. Okay, good. So we have positions to put on today. We have two currency positions to put on, euro dollar and dollar Swiss. Before that, I'm just going to go through with you the price map that we went through yesterday as well. How do you draw all this onto the chart? I must really clearly state that we are traders here first, and then we are then trainers and educators. So it's not like maybe you're going to other companies which will be different, but we are traders first. Over here, what we do is most of the time, 90% of the time, we're using price action behavior study. So you won't see too many indicators over here. If any indicators, is just to help us with mathematical calculations rather than us going through a laborious way of calculating it ourselves. Okay, that without any further ado, let me just put the lines in, and I'm going to do it together with you guys so that you also understand how to do it as well for your own basis when you're doing it by yourself. Okay, now the first lines that we draw over here on the price map, this is an intraday chart, and we're looking at the 1 hour time frame on the cable. Okay, you can draw it on any currency pair that you want. Right, I'm just going to bring my marker up very quickly, and then I can annotate for you, and then you can much more clearer. Okay, good. So as you can see over here, what we have at the moment, what we usually do, the first two lines that we draw is the range for the day. The range for the day from 12 midnight to 8 a.m. The 8 a.m., the 7 a.m. 1 hour bar, which is the one that is currently forming right now, as you can see. Okay, 12 midnight to 8 a.m. okay, is what we look at. So in terms of that, you can see that my two bold white lines over here is what I have, and I move that up to the top over here, and I put the R over there, and also we need the one at the lower end as well, right? So we need the one at the lower end, so that's the lower end over here, which is the lowest point of the bar currently forming, and that would be our range as well. Okay, so that's what we have at the moment. Next, what we then look at is 4 hour swing high and 4 hour swing low levels, time frame correlation as we call it. Now, because we have the indicator over here which actually calculates the swing high and swing low levels for us. Now do remember, yesterday I did stress the importance of quantification. Unfortunately, most traders don't even know of this word, and even if they know of this word, they do not know how to quantify. Now that is a very big issue. As I think yesterday, I think Rishi just brushed on the 3-step methodology yesterday, and on how important the quantification is for all the 3 components of a trading methodology to work. So in this case, quantification is very critical, and especially with swing high, swing lows is so important, because if you do not have this quantification, some people, when you show this chart, there'll be subjectivity coming in. Some people might think that that's a swing low, that's a swing high, right? Or that's a swing high, and maybe this is a swing low. So everybody will be getting different answers, and it doesn't even matter about everybody getting different answers. When you are sitting in front of a screen, you yourself might get different answers on different days. So we do not want that, because if you do get that, and if you do not have it quantified, then you won't be able to get to consistent execution. If you do not get to consistent execution, all the results that you get are redundant, because you will be able to reproduce and scale your results. You don't have a tight model. Okay, I did stress that very, very importantly yesterday. Okay, good. Enough said of that. Now back to the drawing of the levels. 12431, 12106 for 4 hour, 2431, 2106. So I'm just going to pick up my red points over here. 2431 is what we are saying. So let me see. 12431. Okay, yeah, so 2431 is over here. That's of same of yesterday. And let's just quickly just remind myself, 2106, okay? 2106 is my 4 hour swing low levels. Let's see. 2106. Just need to move this out of the way so that I can see the. Okay, great. 21. Just going to move that over here. Just going to quickly just check that was right. Yes, that's right. 2 hour 2106, 4 hour swing low. That's the point over here. What we have, right? And the one at the top is our 4 hour swing high. Okay. Now the next one we're going to do is 2197, 2106. So let's do that. So 2197 and 2106. As you can see, the 1 hour swing high levels 2197 and 2106. The 2197 would be around here, which is near to the range point as well. As you can see, the arrow here, all the swing high, swing low levels are indicated there. And then our swing low level is the same as our 4 hour as well. So you can see how you can easily correlate all of these levels. Some strong support over there, as you can see, because 2 time frames are coming into play with each other. The most important thing is that we have it now quantified, so it'll be consistent all the time. Now the next thing that we look at, so once we've done the 4 hour swing high, 4 hour swing low, and the 1 hour swing high and 1 hour swing low levels, then we look at the previous daily high and the previous daily low levels. Okay, the previous day's high was here. You can see between these 2 blue lines is 1 day, and between that 1 day we get 24 bars because it's a 1 hour time frame chart. Now in terms of the previous day's high, and that's from yesterday, so I'm going to bring it all the way down here, and we're going to get previous day high over here. Okay, so that's what we have in previous day's high. And finally, the previous day's low is what we need as well, right? Previous day's low. Previous day's low is just here and also here as well. Okay, you can easily clearly see that really, as I'm drawing all those levels, you can easily see that there's a lot of cluster over here, right? So you can see that easily that's a strong support level, okay? Because there's a amalgamation of those levels. Right, next, what else do we have? Okay, you can easily see that from yesterday, that's the highest point, that's the lowest point, that's our previous day high and low. And when you correlate that to the daily time frame, you can easily see that will be the lowest part of the bar and the highest part of the bar, right? So that's how we get the high and the low of the previous day. Okay, we go through all this. I mean, if you're a beginner over here, I mean, we have some video material as well, and we go through some of these concepts in much more detail, and also Traders Basecamp and all this intermediate advanced stuff that you're getting at the moment as well. Right, the next thing that I then look at is what we call the stretch point. And yesterday I did mention the stretch levels were actually popularized and made very, very famous by a very big institutional quant trader called Toby Crable. Okay, you all can look into that. 12228. Okay, that is Toby. And Toby, basically what he said is that the stretch is basically, in definition, it means the nearest extreme to the open, nearest extreme to the open. Okay, let me just put this in. Okay, great. Now let me just explain it quickly, because yesterday I know some of you already heard it. So if you look at the daily time frame, what is the stretch actually? What is the stretch? Now let's take a look at this. The stretch, basically, if you have a bar like that, let's say yesterday's bar was like this, right? What if I say the nearest extreme to the open is the stretch? The nearest extreme to the open is the stretch. Over here you got the open. The nearest extreme can either be the low or the high. We can easily see the distance between the open to the low is this small amount over here, and finally the open to the high is this bigger amount, right? Bigger range. So you can easily see that this is a nearest extreme, the smaller range basically to the open from the to the low, right? So that's called your stretch. That's called your stretch. Now the number for the stretch, how do we get it? What then Toby then did is that he added all these numbers up, all this nearest extreme to the open. So for example, for here, open to the high yesterday was the nearest extreme, right? So that's a certain number. Let's say that's 10 pips. Let's say open to the nearest extreme was the high, that's about 12 pips. Open to the nearest extreme, which is a high again over here, that's about, let's say, 2 pips. He added all that up over 10 days and he averaged it, and that is your number called the stretch. Okay, our trader colleague that we had went to program this and he gave us an indicator, and that is what we have over here, the open and the stretch equidistant to the open as well. Okay, that's what we have, and we have found that in cable is a certain number of level of pips that becomes the stretch. So that's what we draw over here in terms of to the upside and to the low side as well. Okay, that's what we do have. That's the pink lines over there. That's the stretch. You can do that any currency pair, any instrument, any commodity, any equities. In fact, Toby Kramer, when he first did it, it was all meant for equities and commodities. So it's something that you guys can definitely apply and cross-apply to if you're trading equities and commodities. The next thing that we then look at is what we call the 0.7 and 0.8 levels. Okay, those are the ATR levels, 0.7 and 0.8. How do you get the ATR? We usually use the ATR 10, and we take the ATR 10 from yesterday because today's bar is not formed yet. So from yesterday's bar, what we have is 120 pips, and then what we easily do is that we do 0.7 of that 120 and 0.8 of that 120. When we do that, we have all the equations and the formulas to calculate that. Our Trader's Essential Kit in our trade journal has got certain formulas that will also calculate for you that you don't need to calculate yourself. So over there, what you're seeing is that 84 pips is for 0.7 level, 84 pips. So 84 pips from the low point, right, for today, current level. I'm projecting it to become the range. So 84 pips, what you can see over here, 84 pips, 12232, 12232. Okay, and the next one is what we got is, let me see, 12232. The next level what we got is 94 pips, which is the 0.8 ATR. Let me just see, 82 and 94, isn't it? Yeah, that's right. So let me get that for you. So 82 is 12229. Okay, that's over there. And the 94 pips, which is your 0.8 ATR, actually 84. Yeah, 84 and 96. Let me just see. 84 is 12231. Right, so 12231. And let me see. And 96 pips. 96 pips from the low point here would be 12244. Okay, good. So we got our 0.7, 0.8. Now we do that for the opposite side as well. From the highest point, then we project down 84 pips again. 84 pips. 12113. 12113, which is my 0.7 level. Okay, right. And then finally, then we got our 0.8 level, which is 96 pips. Okay. And 12101. 12101. Okay. So that's what we got over here as well. Great. Okay, good. So we got all these levels over here, and the final level that I usually look at is this over here, which is our 50% level from yesterday's range, 50% level. So 50% of that would be this point here. Okay, great. So that's that. So let me zoom in now, and you can see that's your 50% point. Okay, good. So we got all the levels now formulated for us over here. This is what is called your price map, and you need to do this every morning. Now, what are we actually achieving from this? Basically, all we are saying over here is that the levels over here help us see how the price moves throughout the day and see where we're exactly at whichever specific time interval in the day. Now, the main levels over here is to facilitate with us projecting the range covered for the day. The whole idea of this is that we are saying that a particular range, the concept here is very strong. Yesterday I talked about concept and objective, which is very important. 99% of traders don't even know what is that, and they don't even know how to form it. Now, one of the most important things that you need to know that is a strong concept that keeps repeating itself again and again. And one of the concepts that we found over here is that a certain range repeats itself every single day, right? A certain range repeats itself every single day, because if you do not have that repeating itself, then you get a straight line across the chart, okay? So, and that range is what we're projecting on from the lowest point over here and from the highest point, okay? And we're seeing where it would go to and how it would respond to those levels, okay? So that's what we are looking at. So the range, let's say you're saying on an average it moves 80 pips, that's what I'm looking to get out of the market. If it's done as 80 pips, I do not enter the market anymore, because my probability is then reduced and my edge is gone, okay? It's all about playing to your edge, because that what will help you in making your cumulative profits in the long run. I'm aware of time. There's only 6 more minutes before we place the orders. I'm going to pass it on to Rishi, who's just going to probably type in the levels for euro dollar, and then we're going to explain to you further on how we got those levels. For cable today, there's no bias. We do not have any bias on cable today, so we're not going to take any trades on cable today. I'm going to leave it as it is. But euro dollar and dollar Swiss, we do have a bias. I'll type in the dollar Swiss numbers very shortly into the chat box. For now, I'll pass it on to Rishi to give you all the euro dollar trades. Great. Okay, I think he has put it in. I'm just going to pass it over to him.
Thiru, thanks very much, and very good morning to everyone. Very warm welcome into the second day of the live trading week event. Rishi Patel, co-founder of Master the Markets, the Elite Trades Conference and the Trades Open Day, ready to go this morning in the lead up to the UK Open here. So we are just about 5 minutes away from placing our orders. I have just put my initial analysis of the euro against US dollar into the chat box just there. So we're looking to place a short order today based on how we've generated the bias from the daily chart. So we've obviously looked at the daily chart. There's a mathematical formula that we've run. Again, everything that we're doing here is fully quantified, and the same way that Thiru has the price map on the pound against the US dollar, I've got exactly the same thing here on the euro against the US dollar. You can see that just here where you've got the same sort of levels. Couple of things that are correlating together that you can see pretty clearly are the range between midnight and now. You can see that's denoted by these gold lines just here. And that range spans from 105.35 through 105.65. So the 30 pip range that's been made so far. It's also stacking up with a 15-minute swing low just there, and also the 1 hour swing low as well. So I'm just going to make a slight modification to this. Just realized, but SH Let's just change that. There we go. So these are the 15-minute swing low and the 1 hour swing low. I've put in an initial entry wrapped around this bar for the euro against US dollar today. So we're looking for a short. I'm looking for this to break to the downside. If this doesn't trigger in the next bar on the 8 to 9 a.m. And it breaks high and it breaks this up to the upside, then I'll cancel that order and we'll reassess. However, at this time, this is what is relevant. So I've got an order in the market to go short. 10546 is the entry short. The stop loss is on the high of this particular range that's been created so far. 10571 is my stop at this time. And the target 10481, so you can see further lower just here. So again, everything that's been put on to the market just here has been done in a quantified way. Even the way that we've lined up these swing lows, you can see here the 15-minute swing low and the 1 hour swing low all correlating together. Even that's done according to a quantified indicator, which has been custom developed for Master the Markets. We call it the Smart Money Indicator. And this a superb piece of technology, really, that works on any chart, MetaTrader 4 base, so it can be running on stocks. It can be running on any market just there. So we do have a bias on cable this morning. It is up, so I guess that Ethereum will be generating some levels very shortly for that. So do bear with us. So that's what we're going to look for. So in a short while, we're going to generate some levels for you for the pound against the US dollar. And on the pound against the US dollar, we'll generate some levels for the upside. We've also just placed in a dollar Swiss trade long as well. That's all in the chat box. Again, I just want to check that everyone can see these trades. I did ask this yesterday, but there's very little point in a live trading event if the audience can't see the live trading levels that we're putting into the market in real time. So please do just let us know by punching a Y into the chat box that you have just there that you can see these levels. That will be majorly helpful just to make sure that we're doing what we're doing correctly. But that's great. Thank you very much. Lots of you typing in a Y just there. So that's great. So it's just coming up to 8 a.m. So we're just going to be placing these orders just now. And I'm sure you'll want to do your own analysis of the chart as well. So I'm just going to put myself on mute for the next minute or so while we go ahead and punch in all the orders. So do bear with me. The mic is going to go quiet. The screen is going to be on pause just for a few seconds while we punch this in. And then we're going to be right back with you. So don't panic. We're not going anywhere. But as we said, as Thiru said on the open, we're traders first and then trainers. So obviously our trades are top priority right now, and that's what we want to communicate across to you guys as well. So do bear with us while we get everything in the market. Okay, so I'm guessing everyone's had an opportunity now to just have a look at the market, do their own analysis, have a look at the trades that we're putting on. So I'm going to carry on, and I just want to talk a little bit about. Tira's already spoken in a little bit of detail about this price map that we put together to help us to understand the game plan for the day more than anything, and it really gives us levels at which we know where things are becoming invalid. If the trade is going to be sort of running in our favor, we know where we can potentially look to monitor things. If the momentum dries up at certain levels on this price map, we can get out a little earlier. But again, all of this is quantified in a very exact rule set, which we put together. In fact, if you were to look at the crib sheet for the actual MG 3.0 pref strategy that we've built here is probably 12 to 15 pages long. It's very detailed in terms of the whole game plan of getting into the trade and where to draw the levels, what's important. So do bear that in mind. One thing that I do want to definitely illustrate as well is that it's essential to have some sort of a plan, a trade plan, a crib sheet in place so that you have a structured and methodological plan. If you don't already have a crib sheet template, again, like I say, it's really important to have one. The crib sheet template actually is a superb little tool which we've actually pre-built onto a set of tools which we call Traders Essentials. In fact, this crib sheet template is a part of one of 7 tools that we've actually built onto a set of tools which we call our Traders Essentials kit. In fact, the whole set of tools looks a little bit like this. I'll show you actually what the whole thing does look like. Here it is. So this is our Traders Essentials kit in a nutshell. It is a set of 7 tools which we put together. You can see that on there we've given you access to the strategies that we trade as well. Actually, Liftoff is already on there, as well as some worksheets. We've got some live trading videos of actually placing the opportunities, as well as the crib sheet templates. Very important trade journal as well. A very, very concise trade journal which helps you to actually accurately record pretty much everything that you need just there. And for the purposes of delivery, we've actually put everything onto a small gold USB key for you. It's an 8 GB USB. You just plug into your computer and you're up and running straight away. So that's the Traders Essentials kit. I'll just drop a little link in there on the chat box. There will be some actual opportunities towards prizes this morning as well in the presentations that we'll be giving in a short while. So just do bear that in mind. But that's the Traders Essentials kit just there. Another thing that I want to talk about is the importance of really quantifying all your parameters just here. So do be aware that we are looking at very key levels here in the market. So some of the things that we've highlighted on the map are the 15-minute swing low, the hour swing low. We've got the 15-minute swing high here as well. And so you can see we're just looking for some of these things to overlap with each other. It gives us a real heads up in terms of where the momentum may be heading. The 1 hour swing high is also here as well. The way that these levels are generated are according to a mathematical formula, these swing highs and lows. In fact, if you look at this plain chart of the Euro-US dollar, you can see that here we have prelaid onto this the smart money indicator. It's telling us exactly according to a mathematical formula where the swing highs and lows are. Now the great thing about this indicator is that it doesn't have any redraws. So I've seen indicators in the past and fractals and things like that where it puts on a high, it tells you a little signal for a high, and then what happens is a couple of minutes later it redraws it because it changes its mind. It's not actually there, it redraws it and puts it somewhere else. With this particular indicator, actually there are no redraws, and this is formulated according to a very exact mathematical formula. And the great thing is actually it will work on any market on any time frame. So if I switch this from the Euro-dollar 15-minute, where you can see that the 15-minute swing low is already just at this level here, so 10535. 15-minute swing high, I can tell you already is here. So we've got this in at 10564. And again, if this particular bar just here closes and it continues pushing downwards, then more than likely there'll be a new swing high that's on the 15-minute euro dollar. But for now, there's the levels. If I switch this to an hour chart, you can also see that you've got the hour swing high and the hour swing low. Again, drawn using an exact mathematical formula, so there won't be any redraws, it won't change. It's set and it's fixed, which means that we can really count on these levels to find the momentum. In a nutshell, what this means is that when you're putting trades on according to an exact mathematical formula like the smart money indicator, you're actually getting your parameter set to be consistent. Now, it's only when your parameter set is consistent that you can actually get the actual opportunity to execute consistently and to get a consistent set of results. More than likely, I mean, when I've seen other traders and I've asked them how they map out the swing highs and lows, more than likely it's often a guess, and they're normally guessing where the levels are. So if we delete and remove this indicator from this spectrum, you can see that it actually becomes much harder now to guess perhaps where the highs and lows are. Okay, we have quite an obvious high here, but then the next question is this one here, would we count this as a high? Perhaps this one here becomes a high. Maybe this one is a low, maybe it's not. Maybe we just look at this one. We're not sure about this one here or this one. So it becomes much more subjective. Problem with subjectivity? No consistency. If there's no consistency, the results are invalid. And anything that you put together, even on a good trade journal, is invalid. It's pointless and it's useless. Actually, we had someone come along to the 2-day Traders Base Camp a little while back who came actually in our July batch, and he was the first one to put his hand up in the classroom to say that he had a trade journal. But unfortunately, when he sent his trade journal across, his entire set of trades were completely invalid and useless. And so everything that he'd done had been pointless because it's inconsistent. You have to have a consistent set of parameters. That's my take-home message here from this. So please do be aware of that. If we are very passionate about these points, then it's because we really want you to understand where we're coming from so that you can gain the best results in your trading career. And hopefully you can shortcut a lot of things that professional traders have gone through, shortcut a lot of things that we've had to go through before we were able to get to, a space of being able to be consistent. And that's what we find is the primary problem for most traders. You can get onto the market, you start placing trades, but you generally finish flat or end up losing just because you don't have a parameter set that's consistent. It's so simple, it's so easy, and everything that we're doing here, these price maps we're building, this pref strategy we're trading, it is consistent, and that's the key. So do bear that all in mind, and that's my real take home there. So get yourself a template for mapping out your trades. The crib sheet template is available on the Trade Essentials kit. Get yourself a good quality journal which has everything inside it that you need to log and then be able to review your trades. Most important thing in the trade journal is it helps you to calculate your statistics at the end, and our templates that are built into Trade Essentials actually allow you to do that. So do bear that in mind. With that said, I believe we have some trade levels. We're just altering some dollar Swiss trade levels at the moment, so just be aware of the chat box. We're just making some slight modifications to that. But the euro dollar at this time, the one that I'm looking after here, looks as though it is about to ready to go. So I've got an entry level in the market of 10549. And the current low is 10551, so we're about 2 pips away from triggering. Do bear that in mind. If there are any questions at this time, happy to answer. Otherwise, I think we're going to transition back over to Ethereum. We'll just take a very short break while we just make some modifications to some trades and give you an opportunity to actually look at the updates that are going through the chat box. Let me put myself on mute for just a few minutes. I'll be right back with you. Okay, so Thiru has just punched in some levels there for the pound against the US dollar, which you can see we're looking for an opportunity long. Entry 121.78, stop at 121.46, and take profit at 122.44. Our levels are already in our orders are already in the market. So if you want to take a little time out just to have a look at that, then you're more than welcome to do that. We will give you a minute or so to have a look at that that opportunity and just assess it, and then we will be back on. We're going to kick off for around about 8:20 a.m. We're just going to take a very short 5-minute break. Just want to double check and fill in our journals, etc. You should be doing the same, really, if you're taking trades this morning, whether they're in line with what we're doing or whether it's your own thing. It's important to keep a journal updated. Who here does keep a trade journal, just out of interest? Punch a Y into the chat box. Let's see. It'll be interesting to see who keeps a trade journal of all of their trades consistently. Okay, so let's have a look at that. What's that as a percentage? So this morning we have, so let's see. Okay, so there's 8% of people in the room this morning that are keeping a journal, which is quite an interesting thing to observe, and that's, you know, about right. The statistics fit, and then of those 8% of people that keep a journal, and we go to the next step, which is the journal according to a quantified set of parameters and then consistently executed in the market for a minimum of 20 trades? Who would say yes in order to answer that question? So is your journal, again, totally quantified? Is it according to a set of parameters which is irrefutable, i.e. it's mathematical, it's a yes or a no, there's no subjectivity? And then is it executed consistently? Yeah, I mean, it doesn't matter which market you're trading, whether it is FX or whether it is equities, it really doesn't matter. The concepts, everything that we're discussing here actually in this live trading week event, you'll see that a lot of things that we do here, a lot of the way that we approach the market is very different to other trading companies in this space and other providers that you may have come across. We're basically talking about concepts here, and these concepts are applicable on any market, any time frame. It's really the market, the time frame is really irrelevant, because at the end of the day, I can map these price bars on any market, any time frame, whether it's soya, orange juice, coffee, cable, whether it's Barclays, whether it's gold. These price bars are applicable everywhere. And so what we're discussing here really are concepts. And that's what I really want you to get through. So whether you're trading stocks, whether you're trading foreign exchange, it's still important to keep a journal according to a quantified set of parameters that has no subjectivity in it. And that way, you're going to be able to execute your trades and have a consistent set of results. Okay, so that's great. So a couple of questions here. How can we get the smart money indicator? Good question. If you want to send across an email, in fact, no, there'll be a better way of doing that. Bear with me. I'll give you a better answer to that. What we'll do is I'll get one of my team to just drop into the chat box a link to where you can actually download that. So I will give you that, not a problem. I want to get a consistent set of indicators to get in and out, to get the in and out points. That's why I'm watching. Okay, that's a good reason to be on this, because that's exactly our approach. So if you want to get a consistent set of parameters, the first thing that you need is what Tira was talking about. You not only today, but actually more yesterday, which are that you need two key things before you even draw up a trading strategy. Who can remember what those two key things are? Two things that are required before you draw up a trading strategy. Two very, very important questions that you need to ask yourself. What are the two things that we need to ask ourselves before we get involved with the market? No, we discussed this yesterday. So for those of you that were on board yesterday, we actually punched this into the chat box. We emphasized in a great deal of detail. Two things that are required. Two key sentences, if you like, two key statements, two key points that are required before we actually place trades, or even before we place trades, even before we draw up a strategy, even before we start putting stop loss rules together, even before we start putting target rules together. Absolutely, that's right, Bob and Colin, thank you very much. Exactly correct. It's concept and an objective. First, you need to understand what is the concept and objective. What are you looking to fulfill? What criteria? Are you looking to build a trading strategy which has short and sharp moves, gets into the market and out of the market on the same day within a matter of hours? Are you looking to build a trading strategy that you hold for several days? Are you looking to capture 60% of an initial move in the market? Are you looking to get in before swing highs and lows form? What is your concept? What is your objective you're looking to fulfill? And then, only then, can you start to actually build a rule set. So this is all broken down in a great deal of detail actually in our 2-day workshop, which is more of an intermediate/advanced training workshop actually, which will actually teach you the core concepts of how we actually build trading strategies. And obviously in a 2-day period as opposed to a 2 to 3 hour period, we can actually go into a great deal of depth. So aware that many of you are not from the UK, but we've had people travel from all parts of the world actually to attend, and I would strongly recommend that you make it down for something like that. Okay, so good. The Eurodollar has triggered. You can see that here on my screen at the moment. So we are short on the Eurodollar, and remember I have placed a target order for 104.81. So we're looking for a move of around about 70 pips at this time, just under. And we'll carry on monitoring that into the rest of the market. What I'm going to do now is I'm going to switch over to Tiru, who will continue on with the analysis and give you an update really on the dollar Swiss and the pound against the US dollar, which we've also got here in the market. So I'll pass that over to him now. If there are any questions, don't hesitate to punch them in. We're going to be doing a complete analysis. We'll also do a review. A couple of people are asking for a review of yesterday's trades. We're actually keen to do that. We just haven't had an opportunity up until now. I think for the first of these live trading week events, the first morning section for us, the first 30 minutes to an hour, is all about actually generating the new trade for opportunities and getting into the market on a consistent basis. And then obviously we have a chance with all of you to review. And that's why we wanted the extra time, and we wanted to run this session a little longer so we can get all of that in. All of the trade details should be in the chat box if you're able to get access to that. For those of you just joining the webinar, are you able to see the trade levels that we've already pasted in the market just there? I wonder if you're actually able to access the historical chat box. In any case, we'll help you out with that. It's not a problem, but I'll hand over to Thiru, who will walk you through the analysis for the rest of the morning.
Okay, hello everyone. I'm just back into here. I believe it's been a busy morning today. You've got all your trade details for cable, Eurodollar, and Dollar Swiss. I think before we move on to today's agenda, I wanted to cover one more strategy for you guys today, and also then take all the questions. But there are some questions from yesterday, right? Some of the trades that we did, so I will be answering them as well. So let me just take some of those questions some of you have asked. I think some of them already Rishi has explained. I think one thing that was being asked by Wayne, I can see why yesterday's stop was moved. No point just understanding the entry criteria. I totally agree with you, Wayne, because you see, in a strategy, there are three parts to it, right? It's just not about the entry, it's also about the stop loss. And also do remember yesterday I did mention about two parts to stop loss, isn't it? What are the two different things that you must definitely have in your crib sheet about the stop loss? What are they? Just type it in quickly. There are two things about the stop loss that you must have inside your crib sheet. What are they? Type into the chat box. The two categories that you must have written out in your crib sheet. First of all, I'm not even sure whether most of you do know what a crib sheet looks like. It looks like this, and we have a template of that in our Traders Essential Kit. As Rishi was showing, you can see all the entry rules all over here, all quantified. See, the two things that you must have in your crib sheet is that you must have first your initial stop loss rules and your trailing stop loss rules, okay? And then finally, then you must also have your target rules as well, okay? This would be the pre-trade target rules, and then there will be intra-trade target rules as well. Pre and intra. And before you enter the trade, what is the target rules you have? And in the trade, if some adverse price shocks happen, what are you going to do to then alter your target if necessary, or if volatility efficiency of the market is not according in your favor, do you then also change your target rules? Okay, so all this must be predefined. We have all of that all written out. Okay, right. So now coming back to the question now about now knowing that you must have these three components inside your crib sheet rules, which is only the first component of the three-part methodology, which is just your crib sheet and having all your parameters, because without the quantified parameters, your stats is redundant. Okay. Now, based on that, why did we do what we did yesterday in terms of our trailing stop loss? So now, let me go through that. Yesterday, if you all do remember, when I went through the strategy yesterday, you can see that I was saying that one way of trailing your stop loss is every 2 1-hour bars, right? So just using time, basically. Remember I talked about 3 types of stop losses? Do you all remember that? Who remembers the 3 types of stop losses that I talked about? Type into the chat box what are the 3 types of stop losses that I said yesterday. We need interaction here, traders, because if you all don't interact, then we are not going to know whether you are understanding it, whether you are getting maximal absorbency over here, maximal, learning over here. Yeah, this is very important. Okay, very good. Yeah. So, even if you're not learn anything or whatever, it doesn't matter. Just type it in. At least we know that you're here, you're present, and you're making the best out of time, because the one important commodity that none of us can get back is time. So let's make the best use of time that you're here for in terms of your learning capacity and becoming professional traders over here. Okay, so Bob, I think yes, you're absolutely right. Okay, so you got the text stop, you got a time stop, and then you got the money stop. Okay, technical stop, time stop, and money stop. Now, the one type of stop that I gave you all yesterday was a time stop. That means regardless of what the price does, every 2 1 hours I would trail my stop loss. every 1 hours, I'll trail my stop loss. Now let me explain. If this, let's say if I entered a particular trade, this was my entry level, right? So once I get a trigger point over here, once I've entered into the trade, then I would just count 2 hours before that, and I would then trail my stop loss over here. Understand? So then it goes to the next bar. 2 hours before, I would trail my stop loss here. Then next bar, 2 1 hour bars before here. Next bar, 2 1 hour bars here. Okay? So this is what we're doing over here. Right? That is called time stop. I did also mention yesterday that if you were to do an efficient way, if you're on a really efficient way of moving your stop loss, then we use a combination of the three, then your stop loss will become more efficient, which is technical, time, and money. Okay, we've done all of that, and also we've given you some examples also in your Traders Essential Kit in the strategy section as well. All right. Okay, now coming back into all of this, so yesterday, let's take a look, right? Let's take a look at yesterday. In terms of cable yesterday, yeah, I'll come to that, Ellen. So on the stats and all that. Now you can see that on the yesterday's trade, what we actually did was we took a long, right? So if you actually take a look in terms of a very simple type of time-based stop, a time-based stop, where we were entering on a level over here. At this, we only would trail our stop loss at 10 a.m., wasn't it? Right? So at 10 a.m., this was the bar that we had 2 1 hour bars ago, 2 hours ago basically, right? So 2 1 hour bars ago, that would be 1, 2. Trail your stop loss to here, right? And that's what we did. That's a time stop. Okay, that's a time stop. And then we got stopped out over here, right? And that's that. We got a very small loss of 15 pips yesterday. All right, okay? Small loss of 15 pips. Now, of course, in the strategy that we actually do and we execute live, the stop loss is a bit more advanced, but I've just kept it simple for this session so that it's easier for you all to follow. Not only for you all to follow, but for you all to execute when you are doing it by yourselves, okay? To give you all an idea. Do also remember yesterday I did mention that I can give you a lot of ideas and tips over here, but finally, you must go and take action, and you must also go and do your own research as well. I can definitely guide you. I can give you a lot of stats. I can give you a lot of pointers, give you really, really amazing quality information and knowledge over here that will help you definitely boost your trading performance. But if you don't do your own homework, it's not going to work, traders. Yeah, this is very important because that's when you own the knowledge, when you put your action and when you put the practice and the screen time. Okay, good. Now let me go on to the other question. So I guess I answered Wayne's question over there. So yeah, yesterday's trade. Okay. So that's one way time stop. How do you determine your bias? Wayne, I already talked about it yesterday. Some ways of determining a bias. I gave you all a very simple example of moving averages and also moving averages, and also you can use the price action point as well. I tell you what, today I actually can give you more, and because some of you are here, I can see some dedication over here. I give you all a bit more on what you also can look at in terms of finding out your bias. Okay, some really, really very strong quality stuff which can help you identify a bias, all based on price. Now, if a large amount of you say yes, then I will share that with you. If most of you don't want it, then it's totally fine. So do you all want it? Let's see. All this are coming. If I see a good amount, a considerable amount of yeses, then I will carry on. So those of you who are listening in, as many yeses as possible, just hit it in. And okay, that's very good. Brilliant. Awesome. So I can see that there's enthusiasm. Because you see, traders, you see, it always works both ways. Yeah, you just can't be just me talking and talking without you wanting the knowledge as well. All right, okay. I always like enthusiasm, and if you show me the enthusiasm, I can share with you most things. All right, okay, good. So let's go through this now. Momentum. Now you see, throughout time, what traders, and in fact not even traders, in any profession, what we usually like to measure is what we call the velocity, okay? Velocity in any particular scenario, or we can call it momentum, either one. Now, velocity, you see, even when you are driving a car, and let's say the traffic police stops you and gives you a ticket, now that is based on velocity as well, okay? Basically speed over time, okay? How fast were you traveling over the time, basically? That is your velocity. Right. So now, how do we then apply that to price? Okay, how do we apply that to price? Just strictly looking at price, no indicators, no nothing. Okay. Now, let me break it down for you. Now, imagine you got the 2 bars over here, right? 2 bars over here, right? Couple of 3 things that you can look at. First of all, what you need to look at is, that's right, Ian, yeah, speed over time. So velocity, distance, or speed, basically distance over time as well. Right, so let's carry on now here. 3 things you need to look at. First, you look for the low to be lower than the last low bar, okay, of the previous day bar. Now, this thing I'm going to teach you right now, momentum over here, right, to determine momentum. I'm going to give you 3 factors to determine momentum. This thing I'm going to teach you right here, right now, is very, very critical for you if you want to just compare within bars for intraday trading to determine or project a high probability bias towards the next day, okay, towards the next day, all right? But you can then use this concept over anything. You can then project it and use it accordingly for longer term trades as well, all right? So let me go through this now. The first point, as I said, look, if you're going to, in a short example, let's say we're looking at the lows, okay, lower lows. In this example, is a lower low, right? The next one that you look at, is your highs, okay? See if there's a lower high as well, right? The third thing you need to look at, is your closes, right? So let me just draw this again. Is your close. Yeah? Look and see if it's been a lower close, yeah? Lower close. Now the fourth thing is important. It gets a bit more specific right now. The fourth thing you can look and see if the close of yesterday's bar, was below yesterday's low. Check that, okay? Close was below yesterday's low, right? It's close below yesterday's low. Then next, fifth point you can look at is then what we can say, yesterday as I was talking about as well, you can look at the mid-range of the most recent bar. Let's say yesterday's bar. Look at the mid-range of that bar and see if it has closed below that, okay? Closed below that as well. So these are the things that you can look at. 5 things you can look at to even form your bias for the next day as well. These are all very powerful indicators. But as I said, just no point listening in. But you have to take note of this, jot it all down, do some research, do over 20 bars, 30 bars, whatever it may be, it doesn't matter. But see if the bias does give you to a large extent of probability. All right. So as you can see, based on these 5 factors, you can see if I were to just take these 2 bars over here, they all fit, don't they? You see, lower lows, lower highs, lower closes, close below yesterday's low, and close below mid-range. Understand? Yeah. And then you can then take the bias for the next day. You can also do it that way. But do remember, it's not just about the bias. It also is about the where you're going to enter, how you're going to trade a stop loss, and how you're going to exit. Okay, it's a lot of things to consider, but of course you take it one step at a time. All right. So usually what I've also seen over the 20,000 traders that we have coached and trained and mentored all over the world is that most people always actually beginning off, even some intermediate traders as well, they always ask like some specific questions, how do you trade it, what's your strategy like, how do you enter, it's not about just one criteria. It's not just about one criteria. It is about the whole cumulative part of how you formulate that strategy together then to form the edge. And that's what Traders Essential Kit is all about, because there's 7 tools to build that strong edge for you to move forward and also to have that consistent edge to make the consistent profits. Now, what really gets to me sometimes is all these old stories that really comes into traders. For example, in the one of the Traders Best Camp that we did, also full room, we had about 30 to 40 traders over there. And out of the 30 to 40 traders, as Rishi had mentioned just now, I just asked simply a question of how many people have got a trade journal. And out of that 40 people, only about 2 people raised up their hand. And one of the guys came on a one-to-one coaching with me, and our charge out rate is like £200 an hour. And he was sitting down with me and everything, and then I was like, okay, fair enough. You did say in that room that you have a trade journal and all that. Now show me your trade journal, right? And that's what exactly. Show me a trade journal. But guess what? I mean, what's the first question? Now, let me ask you all a question, right? What's the first question that you would ask anyone if you're looking at anybody's trade journal? What's the first question that you would ask before you even start to analyze the data? What is the first question that you would ask before you even start to analyze the data? Okay, I got some questions coming in. What rules? What do you mean by what rules, Ian? What is one question that you would ask that person before you even start to analyze his data? What is one question that you would ask the person before you start to analyze the data? Okay, good. You have journal. No, you're already showing you the journal, isn't it? Already, George? Yeah. So someone is already showing you a trade journal, and before you even start to analyze his stats and look through his trade details and all that, what's the one question you ask him? So some of you are saying something like, okay, yeah, that's it. You see, another thing with all of your answers, I mean, retail traders really, is that most of all of the answers that you give are not quantified. They're all very quite vague and very subjective. Now, you see, some of you said, now the only person, I think, Richard over here, I think I know Richard for quite a long time, and I know he's been trading the markets for really long, and you can see that his question over there is very, very specific and very quantitative. He has mentioned over here is that he would ask the question is, are the trades in the journal consistent to a set of rules? Are the trades in the journal consistent to a set of rules? Now, to make it even more specific, actually, I'll add one more thing to that question, actually, Richard, is that are the trades in the journal consistent to a set of quantified rules? Right? Ian, yeah, you got it almost similar. But the thing that you all are missing out is quantified. Because you see, in that rule set in that they are prepared, they can just say, you know what, yes, I'm going to take it when the trend is up. But hang on a minute, let's be real to ourselves. What do you mean by the trend is up? How are you going to quantify the trend is up? And then they usually say, oh yeah, higher highs, higher lows. Okay, fair enough. But how do you quantify a high and a low consistently? So that then you can say that that high is higher than that high. And the best way, the litmus test of quantification is that when you say a particular way that you're going to measure a high or a low, if you have it quantified, everybody that you teach it to will get the same answer in that room. If they don't, then it's subjectivity. Or even yourself, if you're able to get the same answer every time you ask that, then you've got the right set of quantitative set of rules. Okay? That's the litmus test. You must be able to teach it to anyone, and everybody else in that room must get the same answer. Just like the 5 rules I gave you just now, in terms of determining momentum. It is very clear set, it's very quantified. Everybody in the room, everybody in this webinar will get the same answer. If you do not get that, if your rules don't stand to that testament, then you do not have quantified set of rules. You got to be honest, okay? No point lying to yourself. It's 2017. I've met so many, 98% of traders. It's so crazy and it's so obvious when you look at it from the outside how much they're lying to themselves. Okay? Yeah. You got to face the truth. If you don't know, you don't know. Just admit it. Because when you know you don't know, then you know where you are. Then you can then fill the gap to get to where you want to get to. It's very, very important, because one of the other stories that most traders always tell themselves is that, I'm just going to give this a go and I'm just going to see how it works out. Oh, I haven't done this yet. I'm going to give that a go and I'm going to see how it works out. But let me ask you one thing. If you all do not even know the right set of methodology even to get to where you want to get to, what chance is there even giving it a go? You're only wasting time. If you don't even know that a concept and objective is important for building a strategy, and you're telling people and telling yourself that, you know what, I'm going to give it a go, I'm going to see how it happens, you're wasting the most important precious commodity of all, time, not even money. Most people, what they usually get scared of is spending, and the sad thing is they won't think twice about spending on a holiday, but they would think hundreds of times on spending on themselves to generate more cash and more passive cash. It's quite sad. But I guess it's 2017, so we've got to ask really strong questions that really wake us up and move us to where we want to get to. Now, on the other questions, before I go on to the material for today, let me just quickly say, let's see. Do you have any stats on time-based stop loss? Now, Alan, you see, the stats on time-based, as I said, it's not on one factor, right? You can only get the stats based on the strategy, which I'll show you later on as well, yeah? You see, the time-based stop will work differently according to what you're putting it into. It's like saying, is the engine is that wheels of the car good? But the wheels of the car can only be good when it's used in combination with the other parts of the car, isn't it? Yeah. So that's what we got to look at. All right, and also where it's driven as well. Okay. What's the euro-dollar trade? Can't access the previous trades you posted. What's the start day trade doesn't fill until okay, this is a very good question, George. You start a day trade but doesn't fill until evening. You must have a cutoff point. These are all very important rules that you must have on your crib sheet, especially when the large volatility times are over. You should actually have a cutoff point. And usually in cable and all that, we usually cut it off by 3 p.m. if we do not get a fill. We've got other parameters as well. What is all blue and green and red line means? I've already talked about it in the morning. You can probably check the recording. Let me see. Yeah, George, you're absolutely right. You can just use our trading strategy if you want to do it that way. But overall, if you want to then become independent, yes, you can learn how to develop it as well. Not necessarily. You can follow the strategies that we have. And the Traders Essential Kit has got some of the strategies that we are talking about over here. So it's a really good place to start. It's still been maintained. Yeah, okay, it's good. Wayne. Okay, brilliant. I think that's okay, brilliant. Okay, good. So now let's go on to today's topic for today. What we can then now look at is basically what we're looking at today is the 15-minute swing system profits. Okay, so let's take a look at that, and I'll keep an eye on the charts at the same time as well. So I'll put it on the other screen. So right now, so far, so I'm just about to start. Dollar Swiss, yes, we have a trigger at the moment. I guess you all should be in. And Euro Dollar, yes, we have a trigger on that on the short side as well. Okay, so we got both triggers at the moment, Dollar Swiss and the Euro Dollar as well. Okay, but do remember the trade is never over until you exit the trade. Okay, great. So let's move on. That's our disclaimer over there. This is all educational, nothing to do with in terms of trading your stuff. You're all trading your stuff at your own risk. Okay, right. Don't want to dwell too much on this. Most of you already heard it. My beginnings for the new guys who are here. Just a quick 1 minute intro. Our whole journey actually started as me as a PhD researcher. After I went on to this, left that thing because I just wanted to see how I can make money work for me. I went to this Make It Happen workshop where then my vision got crystallized, and basically then after that, the journey that took me on to trading, worked on a trading floor, and over there, like we coached thousands and thousands of people over there. We did live trading seminars as well. We traded company accounts, and after that, we left that place after 1.5 years ago, and then we set up Master the Markets, which is known as Vedanta Trading today. The unique thing about our company is that most of you have probably realized by now is our records are totally transparent. They're research-backed systems, and there's an open door support where you can ask any questions that you want. Okay, the research is continuously being done. I'll show you loads and loads of that, especially tomorrow. Tomorrow is a very important day. I'll show you all of the stats and everything, and the results for some of the strategies. And also transparent. If you take a loss, we take a loss. Like yesterday, we took a loss in some of the positions. Yes, we tell you that outrightly. Okay, nothing to hide, because this is the truth of trading, gentlemen. That is, as a professional trader, that's what we do over here. Great. If you want to know more about us, mastermarkets.net, lots of amazing content over there, especially some of the stuff that I talked about in terms of quantifying momentum, on trend bias and all that kind of stuff. If you want to find that kind of information and concepts especially, go here. There's a blog page as well, a really, really good blog page that you all can take a look at. If there's time, I'll show you all later. I did show you all that yesterday. Just like yesterday, there'll be interactive exercises. You got a chance to win a tea kit, which is a 50% discount, and I know some of you already won that yesterday. You're all very happy about it as well. It's really good. I'm looking forward to seeing you all as well. Over there, we'll be even interacting even more, because imagine that just on the online environment over 3 days, over like 3 hours each, you're already getting so much. Imagine on a 2-day full day immersion course what you'll be getting. All right, not only just trading itself, there are a lot of psychology based sections as well, which really helps you really think about and set your goals for your trading and for either year ahead. Okay, brilliant. So in this one, we're going to be talking about, in this session, we're talking about 15-minute swing profits review, psychology, and also a bit on Q&A as well. Okay, right. Now the concept on the 15-minute swing profits is a bounce-off strategy. Okay, it's a trend-based strategy in line to other time frames. It's exiting on the daily range. Now you'll be familiar with this, because this concept is a very, very strong concept, traders. Yeah, exiting on daily range, because every day a certain range is being made. We want to capture that range and get out. If the range has already been made, then we forget it. It doesn't matter whether you're trading the FTSE, the Dow, or commodities, or equities, or currencies. There will be a certain range being covered every day. Okay, a certain range being covered every day. You can put that in ATR, relative to ATR. That's the common way of doing it, and you can take a percentage of the ATR to capture. Okay, that is basically the concept. Time frames, that's what it is, guys. Yeah, time frames. TFS, time frames. A model of small losses is what we're looking to achieve as well, because do remember, finally, as you're trading it, you're creating a mathematical model, because the mathematics must work for your equity curve to be pushed up. Okay, that's why we've got to keep the losses small. There's 4 outcomes that a trade can have. There are 4 outcomes that a trade can have. Do you know what they are? Type it in. There are 4 outcomes that a trade can have. This was very well popularized and very well reinforced by Alpesh Patel. I think some of you will know about Alpesh. He usually talks about this. The hedge funds also talk about this. The 4 outcomes that a trade can have. Do you all know what they are? No. 4 outcomes that a trade can have. Very good, yes. Small loss, big loss. What else? Small win or big win. Okay, so these are the 4 things. Yes, exactly, Sam. Yeah, very good. So you got the small loss, small win, big loss, and big win. What is the one thing that we definitely need to avoid? It's the big losses. Okay, we definitely do not want them at all. Okay, so when you generate your crib sheet rules, you got to ensure that there's not any big losses that eat up your profits. Most traders, is not that you're trading wrongly or you're not getting your entries right or whatever. Most of the time, usually, it's that you're taking quite a few large number of trades without a clearly defined edge, and which therefore sometimes results in big losses which eat up your profits. All right, so that's what you all got to review. It's a lot of things got to come together for the strategy to finally work. Okay, great. At least more than 40% reliability is what we're looking for if you're especially doing intraday strategies. Objective: capture 80% of the intraday move, as I mentioned over here. Okay, your objective must be very clear. Most traders don't even have objective very clear as well. Entries long. Okay, so now what we're looking at over here in terms of entries, you can see over here the concept. What we're really looking for is, first, we're using time frame correlation over here, right? We're using time frame correlation. We're looking for 4 hour, 1 hour, and 15 minute to be in the same trend. Okay, so if you're using the smart money indicator, then easily the trend is actually mentioned at the top of the chart. Okay, so for example over here you can see that very quickly we can mention, because all quantified, right? You can easily see that the trend is up on the 1 hour, and on the 4 hour it is down. So it's not correlating at the moment. Okay, in terms of this example over here. So you can take a look at all the other ones when you put the smart money indicator in. Of course, I think as Rishi mentioned, if you want a copy of that, and then you can just, our team will contact you. You can just put in your email addresses. Great. Okay, so we wait for it to be in the same trend, and then we'll also be looking for the moving averages as well, right? So the 20, the 80, and the 320 is what we're looking at. Setup bar, this is important. The setup bar, we're looking for it to close below the 20 EMA, and then for the confirmation bar to close above the 20 EMA as well. All right, okay. That's what we are looking at over here. Okay, brilliant. We move on, right? Okay, so let me just see. I can get up my crib sheet here as well. I'll refer back to the crib sheet here. This will be included in the Traders Essential Kit as well, but I can definitely mention it here. It's all done on the 15-minute time frame. Okay, good. Great. Okay, so the next thing that we need to look at, as I said, is a momentum pivot, close below and then close above. Close below the 20 EMA and close above the 20 EMA is what we are looking at. All right. So over here, what we are saying is that the momentum pivot is basically, what we are saying is, it can be in two different pattern forms. Yeah. One, as I mentioned yesterday, it can be a straight line down. Okay, let me just draw that in bars for you. I'll quantify it. 2 red bars, right? 2 red bars like this. 2 red bars. And then you get a green bar over here, right? And you can include one more parameter saying close above the 50% mid-range, yeah? Or it can be 2 red bars like this, like a V shape basically, all right? And then a green bar like that. These are usually the 2 types of patterns in terms of price you'll be looking for the bounce off to happen. You can even use this on daily time frames or whichever time frame they want to use it in. And it doesn't matter whether it's currencies or indices, commodities, okay? These are standard price action patterns. And we're looking for this red bar to close below 20 EMA, and then finally the green bar to close above the 20 EMA, all right? Not only that, we want the stochastic, by the time you get the setup to enter and the confirmation to enter, we still want it to be below 20, pointing upwards. Okay, entry live for 8 AM is what we are looking for. Reward to risk ratio, Reward to risk ratio more than 1 to 1. More than 1 to 1. Okay. Good. So that's what we are looking for. Okay, so now is the first interactive exercise. Before I go into the exercise and the gift, which is the tea kit, any questions so far on what I've covered? Any questions so far on what I have covered so far? Any questions, just type it in. Okay, good. Okay, brilliant. Now to get it more specific, I'm just going to just reiterate what I just mentioned just now. As you can see over here, support resistance ensure that 15-minute 20 EMA is below 60 and 240-minute 20 EMA, which is what I've given to you all anyway, which is the 20, let me just say 20, what is the calculation that we did? Let me just see. So I gave you all the three different moving averages, right? 20, 80, and 320. That's what it is basically. All right, we put it all onto a 15-minute time frame. We'll put it all onto a 15-minute time frame, and that 80 EMA then would translate to basically, as I mentioned over here, which is the 60-minute 20 EMA, 240-minute 20 EMA. I'll put it all into one time frame. Okay, so for the long, the 15-minute 20 EMA is going to be about a 60 and 240-minute 20 EMA. We're looking for a bounce off any of the following EMAs, 20 to 80 or 320. And what all we're looking at for is for a close below or close above any one of those EMAs. All right. Momentum price action setup. I already told you the momentum price action setup. Stochastic. I already told you how to look at it as well. If you're going for a short overbought, if you're going for a buy, it's oversold. Reward to risk ratio maximum. We're looking for 2 to 1. Minimum more than 1 to 1. Okay. I've put some maximum risk parameters here as well. Minimum risk of 8 pips. Is anything else? Yeah, of course. Determining entry. We got a live entry. Entering on the close of the bar at 8 a.m. If you get all the setup right. If done orders, then I've also put an if done order as well for the high of the green test bar. Alright. That would cover up all the entry rules. Okay. Okay, great. If there are no questions based on that, then we move on. Alright? Okay, good. So you go on to the question right now. So whoever gets this question right, then will win a prize to our tea kit, which is at 50% discount. We'll give that to you. And not only that, you get the free ticket to come and see us live in a 2-day immersion course where you get all this and much more information to boost your trading performance to get you to the next level. Okay? It's a beginner/intermediate workshop. All right. Let's go for the question. Which three EMAs do we use for a long trade, and where should a 20 EMA be for a short trade? Okay, I'm getting some answers coming in. I'm typing in. So answer the two questions to the best of your ability. A 20 EMA. Yep, some are coming in. Okay, we'll give it to Tosin, who's got I think mostly of it right. Okay. Lawrence, yes, you're definitely right. But of course, you are a senior trader of ours anyway, so so you would know this anyway, right? Good, excellent. Right, okay. So yeah, we'll give it to Tosin. I think the guys can get the details of you. So yeah, so I'll let them talk to you about it. Okay, start contact. Okay, so we'll contact you for your contact details. If you can just put us your email address and your number into the chat box, then our guys can contact you, okay, for your price to be shipped to you. Right, okay, next. Now we go on to the stop loss rules. Now in terms of the stop loss rules, what we're looking at, initial stop loss and trading stop loss, just like yesterday. Initial stop loss for the low point of the setup and every 2 1-hour bars as well. Now, let me show that to you right now in terms of the live market data what we are having at the moment. Cable right now we do not have a trigger yet, right? It's gone further below. We have certain criteria that if it does a few things, then we won't be taking the trade as well, okay? If it crosses certain levels, all right? Now, in terms of this, however, over here at the moment, we do not have a trigger yet, but we'll see if the price action resets itself up to give us a new trigger point. All right, okay. So that's what we're looking at. But currently, right now, we do not have. Now, dollar Swiss on the other hand, we had a trigger to go long, right? And we had put our initial stop loss. You see, this is a nice reversal pattern over here, right? So for your stops to cash, you see, look at this, a typical textbook stops to cash setup, where you have sell-off starting to begin off. Yesterday, as I did mention, right? So you had sell-off happening over here. Finally, then you get a reversal bar pattern setup, which is this bar here, where it closes above its 50% mid-range, right? Momentum pivot as well, 2 red bars and a green bar. And now on a stops to cash setup that I taught you all yesterday, you can put your entry on the high of that bar and a stop loss for the low of that bar, the lowest point of the setup. Usually you can get a setup, as I've said, I'll reiterate this again, you'll get a setup like this in a straight line fashion, or you can get a setup where there is a bounce where this is the lowest point and then you get a green bar on the high of that. And at that point your stop loss will go for the lowest point of the range over here. All right, always put it for lowest point of the range because you're presuming that it's going to become the low or going to become the stretch for the day. All right, that's what you are looking at. Brilliant. I think those of you are already in the trade, I know we did get an earlier entry on this particular trade. The stop loss do need to be altered a bit because it's 101.53 right now. The low did take out the last low before we got entered, so it'll be 101.51. okay, 101.51. So I'll just type it in. Stop loss for dollar Swiss altered to 101.51. okay, 1.0151. That's what I'm saying. Okay, brilliant. So we got that now. Now, great. So next, euro dollar, right? I'm just showing you stop losses. Where would you put your stop losses? Now you can see over here in terms of euro dollar, entry was here, and the stop loss again for the highest part of the range, which is over here. All right, okay. Again, typical stops to cash setup again. Buying happening over here, buying going up, right? And then we get a reversal setup with an insider bar over there, and then putting a short for the lower point of that range. Okay, but the thing is, did it close below 50% range? Probably not, but you can also start researching into bar pattern setups, so there's insider bar as well. I'll leave you all to research on that. Okay, I just got reminded of the 2 questions I asked you all yesterday, right? What was the 2 questions? One was how much percentage of the move do you capture of the cycle, wasn't it? That was one question that I did ask you all yesterday. Did you all find the answer? Did anyone find the answer to that? How much percentage of a swing move should we capture? No? Okay, I'll leave you all pondering about that. I mean, if you all want to know the answer, you can always ask me later on. Okay. So let me just mention to you right now, you see, I think most of you all are having an educated guess at the moment, isn't it? Now, you see, another way that, you see, we can shortcut our journey is, one, you can do the laborious testing yourself. However, if you do the laborious testing yourself, you don't have the technology to actually have a large sample size data to do it all by yourself. And even if you didn't have the resources and the time and the money to do that, but it'll still take a lot of time. So what's the best way to do it? The best way is to use leverage. Leverage of the professionals who've got the money, who's got the team, and who's got the infrastructure to test many of this and has put out as research data. Now, one of the very famous institutional quants, which you won't usually hear because in retail public, is a guy called Perry Kaufman. And you can actually look into his books, and in that book, he's researched into cycle movements. And in cycles, as you can see, because we know the price doesn't move in a straight line, in a cycle, usually we get two phases. Phase one is in line with the trend. Phase two is a retracement phase. As swing traders, you want to capture the phase which is in line with the trend, okay? And therefore, we want to capture the move of phase one. Now, how much of phase one? We propose 70%. 70% before the fade starts to happen, before the currency or the move starts to turn and to retrace. So one of the critical things, there's one statistics out of the cycle that you must know. There's one statistic out of that cycle. That means all I'm saying in a cycle, basically this is the cycle 1 and 2. There's one important statistic out of this cycle that you must know, to get you out of the trade before it starts to turn. Do you know what that statistic is? There's one important statistic that you must know to help you get out of your trade before the turn, before the fade or the retracement phase starts to happen, which is phase 2. Do you all know what that statistic is? I won't be surprised if all 100% of you in this webinar room would know the answer. Do any one of you know? No? No. I think all of you are saying all kinds of different stuff. It's all guesses at the moment. Where the 70% level is, 711 candles, 10% ATR, 5%. Some of you all, you have to even contemplate on what you all are writing down as well. Yeah, as I said, I don't expect any one of you all to know. Usually these are all the professionals or the institutional quants won't even know what is that statistic that we're really looking for. Okay? No, it's not trend change, none of that. Right? There's one important statistic that you got to know. I'll let you all think on that, let you all research into it. If you are interested in looking into more of this kind of stuff, these are the things we'll be sharing in Traders Basecamp. Yeah, it's really serious stuff, because I can tell you one thing for sure, because I told you right from the start that we are true traders. Yeah, and this is why we are talking in terms of this level of quantification. You won't see this anywhere. Okay, and you do need to know this when you want to have that conviction and that strong edge in the market as you trade it. Okay, right. So let me move on now. Now the target, as I mentioned already yesterday, we'll be looking at X pips of range, or you can look into swing high and lows. But do remember, the swing high and lows must be quantified. Smart Money Indicator does that for you. Okay. And at this point also, I must do mention over here is that please do not think that, like any other educational companies over here, that we're interested to sell you this and sell you that. We are very strong believers in actually building the products. We are very strongly convinced in building the products that will serve the people. You buy it if you think that it will serve you to get to where you want to get to. Okay, we are not here in this business, as I already told you, we're traders here first. We're not in this business to sell something down your throat. I'm not really bothered, and I've told my whole team not to go down that route, because that's not the philosophy of our company. We are here very clear. Our objective is very clear. We are true traders. What you hear from us is the truth and absolute transparency, nothing to hide, because this is the truth of trading. And the third thing is, whoever that we want to come in our fold are people who are aligned with that objective. That means we want to build a very strong community of traders, professionals who have that resilient mindset. Okay, not traders who are wimpy and squealing about just 2-3 losses or 5 losses that they got without any statistical basis and without any strong quantification and conviction. Okay, we want people who are determined, people who are passionate, people who take trading in a serious level. Okay, right? And that's how we develop all our products. As you can see, the smart money just hasn't been designed just to sell someone something. I'm not concerned about that. Most of the stuff that we have for people to buy is the stuff that we use in our trading. That's how it has always been designed. Okay, and the main thing is that if we can train the other traders, and also if there's a serious set of commitment from them as well, and in terms of even cost to most of the products that we even give out is actually minimal compared to whatever is being charged outside there. And the reason for that is because we're not really concerned about the earning and making a big amount of cash from what we want to sell. The main thing is we want to see whether the trader has got a sense level on how he approaches money expenditure, because that will actually very determine on how we can actually trade the market as well, and whether they have that commitment to even spend a little amount of money on themselves and for their future to make their trading work. That's all we're here for. And most importantly, it's all to what you want to achieve towards your goals, and that's how we actually have our products designed over here, right? So please don't come into the misconception that over here we are here to sell you this and that. We're not really concerned about all of that kind of stuff. All right, if it helps you move towards your goals, then you buy it. If not, that's totally fine. Whatever that will help you. One question that you all did ask me just now is that what's the author of the book, right? What's the author of the book that I was talking about, the 70% thing? Now, he is really very good to read. I mean, a lot of the stats you can really get from there. Really thick book. It's not really many people's cup of tea. A lot of some of that we have summarized and made it more easier on our blog articles as well. Bob, the author of that book, basically, it's Perry Kaufman. Now, let me just type it in over here. It's Perry Kaufman. You all can look into his books. Okay, really, really very good. Can really open you up as well. All right. I believe that you all got that author name. Okay, good. Money management, as I mentioned yesterday, you can either use a 1% risk management or a standard PIP position sizing as well. The one main thing that you need to know before you choose from either of these money management techniques, there are many more, but before you choose either one of them, what is one statistics that you do need to know? What is it? I did mention this yesterday, right? Ellen, I'll come to your question in a minute. So what is one statistics that you do need to know before you can determine which money management you are going to use? So what is it? No, you're going down the right way. Is to do something with your risk. What is it? No. So basically what it is, now let me just quickly bring this up. What it is that one important statistics that you must know is your maximum drawdown. This is very, very important. Okay, your maximum drawdown. All right. Okay. So for example, let me just show you something here. If you look at here, let me just bring up something. If you were to look at, let me see if we have it here. Yeah, I think I can actually show it to you from here. Let me just give you a minute. I'll pull up this file that you all can see. Then you can see that how we actually look at our maximum drawdown. Actually, tomorrow we'll be focusing a lot on this, on stats and everything and all that, right? So you can see over here the Morning Glory strategy over here. You can see that 59.21% you can see, and 59,210 pounds on a 100,000 pound account if you want to check that percentage conversion. Now that's not the important point, okay, how much it makes, because what we want is sustainability. It's the maximum drawdown what we're looking at. You can see from July to October is where the maximum drawdown did happen, where we got about minus 6.8 okay, minus 6.8 8 is what we got over here in terms of this strategy. That's what you do need to know. And you can also see that if you want to go and drill down more deeper into it, because you can see that in the months, even though it's a month-by-month drawdown, maximum month-by-month drawdown, you also need to know your trade-by-trade maximum drawdown as well, so that then you know how much to pull through and how much you need to go past if you do have a loss cluster happening over here. You can see that's about minus 700. The most one we've seen over here is about minus $1,200 over here, okay? That's on a trade-by-trade drawdown. You must know that, as you can see, we have done that month by month, all the testing, okay? But we have a totally dedicated research team to continuously do this as well, because so many different variations that we actually test into. Tomorrow, actually, I'll be showing you all of those results, and then you can then all look into that, all right? But one thing you must do know is your maximum drawdown, and there's a couple of things that you need to know by your maximum drawdown. And one of the things, as I said, is the month-by-month drawdown, okay? Because if you do not know all of that, you wouldn't know, and you will have fear when you come down to trading the actual strategy, okay? Trade examples, you can see on 25th May, I'll leave you all to it. You all can take a look at that on the cable and the euro and the dollar Swiss, okay? All this is in the recording. You all can go and look into the years, and you can look into how they are performing. Now, in terms of going into the trading and psychology, I'm just going to take a look at right now on euro dollar. Currently, right now, it's going in our favor in a short fashion over here. Now, dollar Swiss, on the other hand, yes, it's taken out its current day high, and it's short passed through that as well. In terms of cable, 7 more minutes we have to cable before we get some news coming in. So we'll see how that plans out to be. We might get some order coming in if we're lucky before 11 a.m. So we'll see about that as well in terms of cable. All right. Okay, I guess that's pretty much that for the analysis. So we got two currencies at the moment which are going in our favor. Now let me come back into the presentation once again. Any questions that you all have so far in what we have shown you? If there are no questions, type in no. If there are yes, type in yes, and then put your questions in. If there are no questions, then I'll proceed on forward. Okay, brilliant. Okay. Okay, good. So let's move on. Let's push forward. Now, one most important thing, traders, you see, there are three components. There's a three-part methodology to trading, and that's how we actually designed the whole of the Trader's Essential Kit. The seven tools that you actually look at in your Trader's Essential Kit is based on the 3 steps methodology, okay? And the first step is called your strategy component, which what most traders always focus on. That's just only 1/3 of the whole picture. The second thing is what we call the psychology component. And the third one is what we call the optimization component. Okay? So SPO, right? Okay, so that's what we are looking at. All right. I just saw that there was some questions that I think I did miss. Let me see. Okay, yeah, Alan, I think you asked something. Do you trade on a professional platform or do you trade on a retail platform? We have different platforms that we actually trade on. Which professional platforms do the professionals use? You see, it all depends. I mean, it depends on how big your fund is. Now, if the size of your accounts are anything like 10, 20 million, and you are like dealing with investors' cash and all that kind of stuff, if your fund structure, if you are then regulated by the FCA, then of course you will go through something like, not even the retail brokers, you will go through something what is called the prime broker. Prime broker, okay, it's a totally different infrastructure altogether. The prime brokers usually sit on really high above, on top of all the retail brokers, and usually you will not have heard of them. All right. Now, the other thing, however, if you have, let's say, 1 million or half a million of your own cash or whatever, there's some professional setups that you can use. Definitely, you can definitely use TradeStation and all that kind of stuff. You can use also Interactive Brokers. Interactive Brokers are very, very popular because of their low commission points in terms of actually when you're trading commodities and you're trading equities as well. Okay, and in terms of swap positions as well, especially if you're trading overnight positions over there. However, if you're trading anything from less than 100,000 pounds or whatever, I think any of the platforms will be fine. Most people, I think, retail traders, I think they care too much about the minute points. You know, to be very honest, if you have a strategy with a strong edge, it will work on any platform. But the one thing you got to be careful of is whether you are getting spiked out or stopped out sometimes. That's all. But you know, if your edge is really strong, you will make money. But then if you want to optimize your profits, then at that point of stage, then you got to look at better brokers, which then give you more stronger films, more optimized films. That's when you start to change brokers. But go through the first phase by phase before you start to thinking about all these minute details about which brokers and all that. I think Ian is asking about what size your fund is and all that kind of stuff. I mean, we can't really like talk about it publicly, but of course, you know, when you want to talk to us in private, of course, definitely we can talk to you about that. Okay, but we're definitely in the process of setting up a regulatory structure. This is why most of all our presentations and all that are very different, and our approach is very different, because as I said, we're traders first, trainers second. Okay, and we're looking to build a group of traders then who can then trade the fund that we're going to put together. All right. Okay, good. Now, moving on to one of the most important part, as I said, the three components are basically the strategy component, which is your crib sheet, rules for entry, stop loss, and target, and money management rules included in that. The second point is the psychology component, which is what we're going to talk about right now, and finally the optimization component, which is your stats component, right? Now, traders, if the psychology component, the middle part, right, is not strong, you won't get consistent execution. Now, this is the important part. It's like the glue that binds the top and the bottom. If you do not have consistent execution, then your stats becomes absolutely redundant. All your time and effort goes to waste. And this is why traders spend years and years and they just can't turn their trading around, or some strategies just work for 6 months or 1 year and then they totally fall apart on the next year or 2 years. And that's why sometimes for some traders even the back testing even doesn't work as well, right? It's the forward testing. So the consistent execution is very, very critical and pivotal. But do remember, consistent execution is based on two things. One is your mindset, of course. One is your mindset itself, which is the psychology part. And the second part, which is the one even before the mindset kicks in, is your strategy component. It's your parameters at the top, okay? Are they strong, and are they built on a strong concept that is recurring and over time and sustains over time on a strong concept? Okay, right? And your parameters, do they have an edge? And most importantly, are your parameters quantified? Okay, you must have all of this, right? Your concept, your edge, and your quantification. Okay, you must have all of this. Okay, good. Before you can then consistently execute that. Most people don't have either one of these three, and that's why even with the right mindset, they're not able to get the consistent profits and the consistent execution. But for consistent execution alone, yes, you do need your mindset. The emotions must not come into play. Now, how do we do that? This is what we're going to explore. And before I do that, I'm just going to quickly take a look at the market, because the news just came out for cable. Let me just see. Yeah, so you can see there, it's a big spike over here. You can see 15-minute chart. We'll just get a much more closer view into that. Okay, good. So you can see over here, not really much of a movement here. Is what we had. Just a bit of a reversal point coming here. Is the most that we got. Okay, this is a good reversal pattern, so we'll see if it sustains true or not. And I will analyze this into the end of the hour, and if we do get a reversal point, then we'll be placing a long on this. Now you see, traders, again, this is a typical textbook stops the cash setup, right? Because you can see straight sell-off, no? Straight sell-off. Look at all the bars going down, right? Forget about what color they are, but you can see lower lows, lower highs generally forming, isn't it? Yeah. And then finally, now what you're looking for is a reversal bar to give us some kind of a buying pressure clue where it closes above 50% mid-range, and then we can place an entry order to go long. All right. So that's what we're looking out for here. Okay, brilliant. Right. Okay. So that's to do with that. Now let's move on to the trading and psychology section over here. Right, now, what creates fear? Right? What creates fear? What do you all think creates fear? Just type it into the chat box right now. Because this fear thing is a very big thing for traders, isn't it? Because especially when you get a loss cluster of 5-6 trades or whatever, and let's say you've lost about 1,000, 2,000 pounds, or 600 pounds, whatever, if you did 100 pounds risk per trade, then you start to get to this paralysis where you do not want to place the next trade anymore. So what is it that really creates that fear? What is it you all think? Just type it in. The unknown. Loss. Yeah, big size. Okay. Okay, good. So we got a couple of answers over here. Now, you know, if you really analyze your thoughts, this is when you contemplate on your own thoughts, you will start to find out the main thing that creates fear is the past. It's the past. And especially, what about the past? Like most of you have said, it's the losing trades. Now, two critical things over here. If you want to forget about the losing trades, where must your mind be? In the past, in the present, or the future? Where must it be? So everybody just give it a go on this. If you want to forget about losing trades, where must your mind be? In the present moment, or in the past, or the future? If you want to forget about a sad thing that happened to you in the past, where must your mind be today? In the present, the past, or the future? Okay, as I can see in all the answers that are coming over here, exactly, that's right. Most of you all saying it's the present, right? Present, yeah? So therefore, how do we train the mind to be in the present moment? Now, some of you said future, but do think about it. When you start to think about the future, whether the trade will hit the target, whether the trade will hit the stop loss, what happens? Again, anxiety, right? You start to do things, your emotions will take control of you, and you start to do things that you're not meant to do according to your plan. And the same thing when it goes to the past. So you must continuously keep the mind in the present. If you all have read the book New Market Visits, where Jack Schwager goes to interview all the top traders in the world, you will see that all the different traders, they do different kinds of techniques to keep the mind in the present moment. And one of the most common ones that has been found over lots of scientific research, and ancient wisdom also proves this, to keep the mind in the present moment, use the power that you always have, which you're doing 24/7, which is your breath. Okay, your breath. Once you take a deep breath in, your mind comes back into the present moment. Take 3 deep breaths in, the more control you have, and the more it will come back into the present moment. One of the biggest organizations which is very well known for using the power of breath to bring the mind more into the present so that it's calm, and it then erases impressions of the past, is this organization called the Art of Living. The Art of Living. I will strongly urge you all to go and look into this non-profit organization, which is so massive, which talks about this power of breath and bringing the mind into the present moment. Okay, good. So that's that. So the first thing is that to eliminate the fear and to go past the fear, what we do is we have to basically let go of the past. So the future outcome of a trade. So the past and the future, as I said, will create the fear. Okay, retracing, gaining less, profits or losses, as you all know. And missing out, that's the final one. Okay, so if let's say, especially a limit order, you might think that, oh, you might not come and retrace to get into your order, and you might miss out. And again, this is predicting the future gain. Okay, so the past and the future is what creates the fear. To overcome the fear, what do you need to have? As I said, bring the mind to the present moment. Not only that, keep on reminding yourself. This is why our Make It Happen section in our Traders Basecamp is so important, where we talk about having a life purpose and a vision. Inside the TE kit, the Traders Essential Kit, we also do have a psychology section where it talks about certain meditative techniques which brings your mind into the present moment. And not only that, we also talk about how to create your life purpose and your vision map that you need to keep in front of your trading desk, because that is the one that will help you pull through your challenges and your obstacles and the loss cluster that you have in your trading career and your trading progression. All right, and the higher ideal that you're working for, usually a higher ideal is supported not only just by working for yourself, but for working for a wider community. So for example, in Vedanta Trading over here, all our traders, we have this common vision that every month from the trading profits that we make, when we hit our targets, we will give a certain percentage of it to one of these schools in India which actually feeds breakfast for children. Okay, and usually when we make much more profits, then we usually give more profits away to feed more children. On a minimum, we aim to feed at least 108 children every month, and we want to keep on progressively increasing this as we increase our trading community pool. Because you see, as traders, let's practice good trading habits that actually motivate us to be in discipline, and also at the same time, why not, we serve others and do good as well. We change lives, okay, as we are trading for our own benefit as well. Okay, good. So that's what I say. The importance of having a higher ideal will help you to overcome the fear and keep you in the present moment, because now you have a wider responsibility to look at. Right. Okay, great. And as I said, be present, foresee the price route probabilities, know your stats. Know your stats. Very, very important. That brings us to the end of this presentation. Before I hand it over to Rishi, just a quick summary about yesterday's positions. This is a very, very good example, right? This is a very good example of keeping your mind in the present moment, because we talked about all of this right now. You can see yesterday's positions over here. As we started off with the live trading week as of yesterday, you can see, let me just see, right, great. Now GBP USD, of course the exit dates will all be the same as yesterday, because we enter and exit within the day, or intraday positions, unless the end of day positions like what Rishi was calling out yesterday. We took out 3 positions yesterday. We had a bias out of them, and all of them either hit your initial or your trail stop loss. You can see that in terms of cable, it hit our trailing stop loss, small loss of basically of about 15 pips what we had yesterday. And in terms of the euro dollar, what we actually did as well, you can see over here is that we had 10572, it hit our initial stop loss, and over here on dollar Swiss, we had a trailing stop loss hit at 1046. which was basically at about 14 pips loss. All right, is what we had. Now, basically, what we are saying is that even though you have this tree loss and all that, because you know your maximum drawdowns and everything, so it's basically not that fear shouldn't hit you, as we just talked about just now. Just because you had 3 losses in a row, that doesn't mean the fear must hit you, because once you know your stats, we know our maximum drawdowns and everything for all these strategies, so we pull through them because we know our stats and we know the edge in the system. But however, when the losses go past our projected drawdown, right, and that's when we need to stop trading and we need to review what we have to see if the edge is really still in the market or not. All right, and your higher ideal continuously, I mean, even knowing all of that intellectually, your emotions can still get a better of you, and this is why you need your higher ideal vision board in front of you to keep on creating the impression in your mind to pull you forward past those challenges and the emotional flux that you may have. Because do remember, in the end, if you're not trading with a team as well, if you're trading alone, that's another biggest drawback when you're trading alone, is that the emotions can hit you really very hard. But when you're trading as a team, it's much more difficult, because the trading, the team energy flow can actually pull you and keep you at an intellectual standpoint to override the emotions and keep you integrated. Okay, right. However, the 2 positions today, we must not let the past affect us. The 3 positions today are totally new and unique, so we will look into them on how they basically perform. You see, right now for cable, in terms of our positions over here, we won't be taking a long anymore in terms of our bias, because it's already gone furthermore into a short. Done our range as well. As you can see, this is why we draw all our ranges and everything. It's done our 0.7 ATR range for today. Now the next one over here is dollar Swiss. Dollar Swiss is going really nice in our favor over here. We will see how far it is to our target, as we have certain rule points over here. Euro dollar is also going in our favor over here. So this is what I mentioned about, do not worry about what has happened yesterday, because today is a unique opportunity. You need to have your mind in the present moment. This is what we call about real-time trading in full transparency. Not only do we just say it, we show it to you as well. And you know, the point over here is that we're not, as I said, we are traders here, right? We've taken thousands and thousands of trades. I've got no problems in losing trades in front of you, because we're so clear about the edge that we have, and we are convinced about it. And when the edge is lost, when we start to see that the market is giving us some feedback that is actually overriding what we have from the past, which is going more than our maximum drawdown, we're going to stop it. We're going to analyze it as true traders. Okay, we're not going to be fearful here. We're not going to hide this. We're not going to hide that. We're not going to hype you up to do this and to do that, and to buy this and buy that, and to sell you down this and that. No, we're not here to do that. I'm telling you that outright, because we're very, very clear on who we want to work with, on who we want to actually interact with, and whose lives we actually want to improve, and then to improve your trading performance. Our objective is very clear over here. We are traders first. And as sharing our trading knowledge, we want to establish the truth in this industry, because there's a lot of hype and nonsense going out there. We want to establish the truth in this industry to help true traders who really want to make it work, who are really honest to themselves and not feeding themselves a lot of lies and nonsense, because I heard that so many times as well. We want to work with those true, determined traders to make them really progress in their trading performance, to hit their trading goals, and not only to change their lives, but to change other people's lives as well. Okay, this is what we're here to do. Great. Okay, I'm really glad that all of you are here. I'm really also very thankful to Simon as well for creating this opportunity for all of us to see all this in live, because we're really, very, very clear and really passionate about setting and establishing this truth in this industry, because this is how it should be done. Okay, great. I'm going to now pass it on to Rishi. I will look at the questions. If there are any questions that I can answer, I will just type it in the chat box, or I'm sure Rishi will be able to answer them as well. Okay, brilliant. I think with that said, I will pass it on to Rishi.
Hello, is everyone able to hear me okay? And see my screen as well? Just punch a Y into the chat box, let me know that's okay. Great, how's everyone else? Great. How's everyone else doing this morning? Is it okay to take a 5 minute break to give you a little bit of a breather before we carry on? Yes, something like that, Ian. Good idea. Let's take a 5 minute break. So that means that our screens are going to go onto pause, our microphones are going to go onto mute. Don't think that we've gone anywhere. We're going to finish our session at 11 today, pretty much sharp. I've got a lot of content to get through. I want to show you the liftoff 1.0. I want to show you the liftoff 2.0. I want to show you how we upgrade strategies. I want to then also talk a little bit about how we've integrated the Traders Essential Kit items into the liftoff research that we've done as well. So it's a very strong session coming up. So you're going to need to have full attention span about you. So have a 5 minute break. We're going to start at 9:50 a.m. Okay, welcome back to the live session here. Rishi Patel, co-founder, Master of the Markets, the Elite Traders Conference Traders Open Day. It's the 11th of January 2017, which is coming up to 10 a.m., which means a couple of things. It means that I'll be taking over from Thiru and walking you through some of the updates on the end-of-day trading strategies, including the dollar yen, which we had from yesterday. It also means there'll be an opportunity very shortly to trail our stop losses on the intraday trades that we're currently running. So just be on the lookout for that as well. We're going to be trailing our stop losses. So just again, do be aware of that. That's what we're looking to do. And of course, we should do that for 10 a.m. And then after we've done all of that, we've got that out of the way, I will then commence a presentation on the end of day trading strategy, which we call over here at Master the Markets, the liftoff. And I'll be giving a presentation on the liftoff 1.0. And then I'll be showing you how we actually identify criteria to upgrade a trading strategy as well, and how we upgraded in real time the liftoff 1.0 to formulate the liftoff 2.0. And I'll be showing you the difference in results. And I'll also be showing you how that research and testing was based on the smart money indicator, was also fully quantified. Every single parameter is totally reproducible in real time and in real markets, and how we can replicate the results from back testing into forward testing as we move through the market. There will also be some prizes being given away as well, so be on the lookout for that. So stay tuned. You want to keep sharp on all the information we're going over on the live charts, on the presentations, and there will be, of course, some prizes to be won in this morning's live event, so do be on the lookout for that. So about 5 minutes time, what we'll look to do is we'll look to adjust and trail our stop losses. And what I'm doing is I'm just waiting for that opportunity so we can get that out of the way. We want to do that on our end as well, so we can then have that trailed, and then of course we can give you our full focus and attention. So we will be good to go for around about 10:02 a.m. So we'll just give ourselves a few more minutes, I think, in terms of just a break. And then at 10 a.m. we'll punch some things into the chat box to let you know where we're trailing our stop losses to for the various currencies. And then of course we will be able to resume the rest of the presentation for the rest of the morning. Okay, good. Welcome back. 10:03 a.m., 11th of January 2017. Just an update from our end, and the reason for the slight pause there is just that we could quickly complete our analysis in terms of our trailing stop mechanism. So we have a trailing stop now of 1.0564 on the euro US dollar. So we are moving from our initial stop. And our initial stop, as you know, was 1.0571. We're now trading that to 1.0564. So we're looking to just minimize the downside there. So we're short the market at the moment, 1.0546. So we are still exposed to 18 pips of risk at this time. Obviously, we're looking to minimize that as soon as possible. But in the meantime, our target stands at 1.0481. This is our target here on the euro US dollar. So we are looking for it to run down towards that. If there's any change in that, then we will update you accordingly within the next hour while we're all together. So that's it on the euro dollar. Nothing on the trade dollar Swiss to go ahead and trail. And then let's continue and let's resume on with the rest of our presentation for the morning. Let's start by looking at the dollar Japanese yen on the Liftoff 2.0, which we actually did look at in a little bit of detail yesterday. And I did promise I'd explain the full parameters and the reasoning for this into today. So this is good. This chart is still intact. This is where we left it yesterday. So you can see that yesterday we had an entry order of 116.25, a stop of 115.04. So you can see that that was the trade risk on that particular trade. It's coming in at roughly 120 pips, 121 pips, I believe, of trade risk just there. So with that 121 pips, we're looking to get this upside just here. This is 300 pip plus move we're looking for in a nutshell. So 118.77, and that's looking for a 252 pip target to the upside. Why did we look at this particular trading opportunity is what we're going to be discussing in the upcoming presentation. The premise of the Liftoff 1.0. I'm going to be taking questions as we move through as well. Let me just check to see if there are any new questions that I can handle before I get started. If not, we're going to go straight into the presentation. But the updates on this dollar yen at this time, there's nothing new to do. We have no trading stop on this dollar yen just yet. We're looking for this target with this price current to move away from the 20-period moving average. And we're looking for it also to confirm a new swing low, really, according to the Master Market Smart Money algorithm, before we can actually take action and go ahead and trail our stop loss. So just being on the lookout for that is what's important at this time. Nothing to do in terms of a trail on that one. What I'll do is I'll just recap very quickly the trade that we did take yesterday. Do bear with me. There we go. Right, so there are no new questions, which is great. So the dollar Japanese yen was a liftoff 2.0 trading strategy. Entry was everything is displayed on the screen there for you. The entry was 11625. The stop loss was 11504, and the target we're looking for is 118.77. So we are still holding that trade. There is no new trading stop opportunity at this time. And let's go straight into our presentation for the liftoff just there. So just a quick disclaimer, really. Trading on margin carries a high level of risk, may not be suitable for all investors. It's a high degree of leverage can work for you as well as against you. All information is provided for educational purposes only. That's very important. Vedanta Trading Limited and the presenters are not financial advisors, do not recommend any of the securities of any kind. Any securities that are mentioned are cited only for illustrative and educational purposes, and you should be aware of these risks that are associated with foreign exchange trading and seek advice from an IFA if you have any doubts. That handsome fella on the screen is myself. My name is Rishi Patel. I won't do a long intro because I believe most of you have seen me present already. My background is in computer science. Used to own a video production business, interestingly enough. Didn't really work out for me, especially into the crash, and so I met Thiru in 2008. We started to trade financial markets, and we've been doing it professionally since around about early 2009. So it's been quite an adventure. Transparent track records, research-backed system, and open door support. These are really the unique things that make Vedanta Trading and Master the Markets really stand out from other people in this space. We have a very clear objective. We're looking for a very certain category of trader to come ahead and work with us. So most of what we do really is very much done on a by invitation only basis. So we really want to help people to be successful, but we're also keen and conscious that you need to have a certain set of attributes to achieve that success in the financial market space. That's what we found from mentoring, coaching, working with well over 20,000 people in this space over the 8 years that we've been in the industry. So open door support, we're happy to answer any questions. We do it all transparently, and everything that we do in terms of trading strategy and system has research behind it, has statistics behind it, helps us to build our conviction and our belief that the next trades will work out and just form a part of a series of trades, and we look at everything as a probability base. That's our website, masterthemarkets.net. Check it out. It's a new website. It's just been released and launched. It's a great site. It's got a great blog on there as well. I would strongly recommend subscribing across to the YouTube channel on the blog. The reason for that is that our blog is not a text-based blog only. It's a video-based blog, and we keep releasing more and more new content and material onto that. So that's very much worth subscribing to, just primarily to gain all the benefits from that. So in fact, what I'll do very quickly is I'll just show you what the blog looks like on the website. Let's have a look to see if we can just pull that up. Let's see here. There we go. So this is our site just there, and if you just click onto the menu and onto the blog, you can actually see all of the different videos released that we've released in this next page as well. So we've got all of these different topics that we've discussed, and you can go ahead and get an understanding of some of the superb topics and titles that we put together. So here you go. If we click onto one of them, you'll see you've got a video blog at the top, and then our textual blog actually underneath it as well, just there. So if whether you're reading or whether you're watching the video, well worth watching. As I said, subscribe to the YouTube channel. It's a superb place to see all of our videos. You can go ahead and subscribe. What I'll do is I will get my colleague to actually drop in a link to our YouTube channel. So if you want to go ahead and subscribe, you just click the subscribe button. It's the red button that says subscribe on it. Pretty easy to subscribe to. I noticed that it doesn't have the access to do that just yet, so let me just make him make him an organizer. There we go. Yes. Okay, so yeah, my colleague will drop onto there just for your reference. He'll drop on there a link to our YouTube channel. So you've got access to that. In the meantime, this presentation is, as with all Master the Market presentations, full of prizes and giveaways. So please do be on the lookout for that. You've got the opportunity to win a Traders Essentials kit with a 50% discount, which will include a free ticket to our Trades Basecamp 2-day workshop, where you can meet us and work with us in real time. So live trading week liftoff. In this session, we're going to be showing you live trading with real-time real cash. We've been doing that throughout the last 2 days. Variations 1 to 4 of the liftoff trading strategy and any Q&A based off of the back of that. So I'm actually also going to add to this as well by showing you how we have actually upgraded our trading strategies so that we can formulate a new trading strategy with added parameters to help us to refine the opportunities that we're taking. So everything that we're doing here is very much based on templates and journals that we use all the time in real time. So I'll give you a very quick example of the journals that we do use. If you look, for example, at our trade journal just here, you can see that we're basically able to capture all of the information that we need to do any kind of research. So we've got the trade that we're taking, the fill date, the exit date, whether we're going long or short the market, the time frame, entry reasons, and then any column that's listed in blue here has a set of formulas inside it which will automatically do the calculations for you for where your target is, how much you're risking, etc. This is a superb journal for anyone that wants to take a very mathematical, quantitative, driven approach to working with the markets. Why is that? It's because it helps us at the bottom. If you look, you've got a set of statistics which will tell you the number of trades you've taken, how reliable your system is, how much money you've made from it, how much you've lost, what your net is, tell your expectancy, or it's actually calculate everything in there for you. And this is one of the templates which we've built into the set of Traders Essentials kit. The Traders Essentials kit, as you know, is a set of 7 tools which are available at the link just there. So do be aware of that. And the other element of that, of course, the website for getting your Traders Essentials kit is on the bottom of the page, but my colleague Milan will also drop that into the chat box now for you as well, tradersessentials.co.uk, so you can access and have a look at that material. That's a superb piece of technology. 7 tools all come to you on a USB key with a DVD to our trading movie, our trading documentary that we made, that we launched a little earlier, late part of 2014 in the Empire Cinema in Leicester Square. So it all comes with a great little set. Will be posted directly to you by our distribution warehouse. So that link will go into the chat box for you in just a couple of seconds. So let's talk about Liftoff. So Liftoff is very much the trading strategy that we use. Is one of the core strategies that we use in the live trading room, all based around retracements, pullbacks, and getting into a trade really at a discounted or a better price than where the trade should be at. So in a nutshell, it's all about retracements, it's all about pullbacks. Some people call them mean reversions. Whatever it is that you want to put a name to it, it's about getting into the trade at a discounted price or a better price than where we have originally got in. So what generally tends to happen is you see the stop losses being positioned behind this 20 moving average, being flushed out, and then we're able to capitalize on the 3 phases of the market makers methodology. And what we're looking to capture is the profit release phase on the Liftoff strategy. So really the market makers methodology I did go over in a little bit of detail yesterday. So we initially see accumulation, then there's a manipulation phase where the price is taken in a different direction to where the market makers really want it, just to manipulate the crowd. And then there's a profit release phase, and that's the Liftoff strategy, looking to capture that profit release phase. Basically, that's the core goal. So this is a strategy that can be traded on an end of day chart. We've only tested the Liftoff 1.0 and the Liftoff 2.0 on daily charts, and so we know that it works on daily charts. Now other time frames, because it's a concept, because it's not necessarily specific to the foreign exchange market, because it's not really about drilling it down to a certain strategy, or it's not really built for a certain market. It's a concept. It will work on the stock market, it will work on commodities market if you test it, and of course if you've put the parameters in place correctly, because it's a concept based around, as I said, flushing out the stop losses, 3 phases of the market makers methodology, getting in at a discounted price. It will continue to work over time if the parameters are correct. So that's what we put together. You need 3 moving averages on your chart: the 100 moving average, the 50, and the 20. All of the moving averages that we're using here are exponential moving averages. Exponential moving averages. Let me show you what this looks like on a chart. So if you look as our example of the dollar Japanese yen. So the dollar Japanese yen, you can see we have the three moving averages on the chart. We have the 20 period, the 50 period, and the 100 period moving average. All of these are exponential moving averages. So we do have all of those moving averages on the chart. We've also backed it with a smart money indicator, but that's really only relevant to Liftoff 2.0, which I'll discuss shortly. So here's what we're looking for. We're looking for the 20 moving average to be above both the 50 and the 100 period moving average. So this is really what's important with the lift-off strategy. Really looking for the order of the moving averages, because the order of the moving averages in this particular trading strategy, not all trading strategies, just this particular one, gives us indication as to the trend. So we consider the price to be in an uptrend when the 20 moving average is above both the 50 and 100. We consider the trend to be down when the 20 moving average below both the 50 and 100, and we then look for a setup and a confirmation bar. So the setup bar, if we're going long, is on the left hand side just here. If we're buying, then we want a setup bar to close below the low of the 20 period moving average. For the confirmation bar, we're looking for the close above the 20 period moving average. This is for a buy trade. Now obviously for a short it's the other way around, but if you're buying, then that's the order that you're actually looking for. So again, this strategy is actually included on the Traders Essentials kit. I just want to say that. So if you're buying the Traders Essentials kit, you'll get a copy of this strategy. Not only that, you'll get the crib sheet, you'll get some worksheets with some examples on them, and you'll get some videos as well showing you how we've executed this live in real time. So that's actually all on the Traders Essentials kit, and that is a part of it. And my colleague has very kindly just put a link onto the chat box there for you for the Traders Essentials kit. So, okay, with that said, we have a superb prize that we're about to hand out now. Let's see if we can give this a go. So I've been over so far a couple of things. We've been over the concept, we've been over the objective, we've been over the core basis of how the strategy is made up. Let's have a quick interactive exercise just here. This is the second exercise of the morning. It's the second gift of now opportunity for you all just there. Just a recap of how this is going to work. Normally when we put a question up, we get a huge flurry of answers coming in, and so what we look for is we look for the first one to have the correct answer, and then we'll analyze the list. That will take us a couple of seconds because normally there are numerous responses. So that will take us a couple of seconds, and what I will do is we'll just go ahead and announce who the winner is, and then my colleague Milan will, of course, just drop you a personal message and just ask for a little bit of your information so that we can make contact and we can put you in touch with the team in the back office so that they can get you that prize out via the warehouse. So let's go for the question. I'll display the question, and the first person to get the correct answer, sometimes there are two-part questions, sometimes there are one-part. The first person to answer the question correctly will have the opportunity, of course, will win the prize, the gift of now just there. And the prize, of course, is a 50% discount voucher to our Traders Essentials kit, and that includes a free ticket to our two-day trading workshop, Traders Basecamp, otherwise retailing at $497 plus VAT. Here is the question. So, all fingers on the keyboard. What is the objective of the lift-off strategy? What is the objective of the lift-off strategy? Okay, so there does look like a couple of answers have come in. They don't. I don't actually have a fully correct answer at this time. So I'm just going to let my colleague look through that, and we'll come back to a potential prize winner, perhaps someone that's got the closest answer. If you haven't already had a go, well worth having a go, because we don't have a completely correct answer just yet. But in the meantime, what I will do is I'll move on. We'll continue through to the rest of the presentation. So here's step one of the liftoff strategy. So here's how this whole thing will formulate. I'll give you a step-by-step breakdown, then we'll go into the market and we'll do a couple of live examples, and I'll tie in how the dollar against the Japanese yen actually has actually formulated into being a liftoff opportunity. So the first step is to identify the order of the moving averages. The first step is to identify the order of the moving averages. So step one is check that if you're taking a buy trade, that the 20 moving average is above the 50 and the 100. So if you're going long, 20 should be above 50 and 100. Obviously, if you're going short, then it should be the other way around. If you have that checked off, then you can go into the next question. So the next one is identify a setup bar. Wait for the price to retrace and close below the 20-period moving average. Below the 20-period moving average, and we will then look for that give us a setup bar. Then obviously we'll look for a confirmation bar, and that's a bar to close above the 20-period moving average. Now, we said here that there should be a maximum of 10 bars in between close below and close above. Let's go over to the dollar-yen chart and have a look at how that one actually worked out. So if you look at the dollar-yen chart and you look carefully, you'll see, let's pull open my drawing tool here to make my life a little bit easier. Right, and here we go. So that's a pen. Okay, so if we have look at the dollar yen, for example, here, would we all agree, you can punch a Y into the chat box if indeed you do agree, would we all agree that we have that the 20-period moving average is above the 50-period and the 100-period here? Would that be fair to say? Does everyone agree with that? Yes? Okay, great. So if we've got that, that's the first quantified parameter satisfied. Okay? So then what we're looking for is a setup bar. So can everyone see that here we have a close below the 20-period moving average? Can everyone see that? Okay. This bar just here has closed below the 20-period moving average. That's step two. And then step three, remember, is a confirmation bar closing above the 20-period moving average within 10 bars of the setup bar. So here, what we've got here is the setup bar. Then we've got the confirmation bar just there. So that's that is the, in essence, that is a liftoff strategy setup. That's the core goal there. Now, we don't take trades which are above a certain risk on the liftoff strategy. So any trades that have more than a 200 pip risk, we wouldn't take, and hence we've placed a limit order on a 4-hour swing high to get into the market at a slightly better price than the original price, because the next part of this is actually positioning the order. So the order for the liftoff strategy would normally go like this. We'd have a the high of the confirmation bar. The high of the confirmation bar, in this case the high of the dollar yen daily bar, is 117.16. So the entry would go, and this will be on my presentation, the entry will go 3 pips above the high of the bar, and our stop would go 1 pip below the confirmation bar's low. So here is the confirmation bar. The entry, I'm going to put it in a slightly different line just to make it nice and clear here. There we go. Let's put it in a color that we don't have there, yellow. Okay, so the confirmation bars, the entry will be 3 pips above the high of the confirmation bar, which is 117.19. 117.19 is where our entry would normally go on the lift-off strategy. Don't forget, this is a swing trade, so we're looking to hold this for a period of 3 to 10 days, and we're looking to hold this for quite some time. So bear that in mind. The stop loss will go on the low of the confirmation bar, -1. So the low of the confirmation bar here is 115.05, and you can see that's the reason I positioned my stop loss just there at 115.04. So that's how to place the order. Now, obviously, if it was a short setup, then we'd do this the other way around. Other than that, we would look for an opportunity to get involved there with the lift-off strategy setup. Okay, so that's what we're looking for just there. Let's go over to the next slide in the presentation. Is this clear to everyone in terms of how we actually identify a setup and place the order? The next step is management of the actual trade once we're in it. So just punch in a Y if you're happy with why we're in this particular trade, or the fact that you've understood steps 1 to 4 in terms of identifying order of moving averages, setup, confirmation, and placing the order. Please can you explain the entry price? Be happy to. Yes. The entry price on the lift-off strategy setup is 3 pips above the high of the confirmation bar. Now, the reason that we're looking for 3 pips above the high of the confirmation bar is because we're looking for a little signal that the momentum is going to continue on to the upside. So, for example, on this particular bar just here, the confirmation bar looks like this. If we position an entry order just here on the high of the bar, then we look for the next bar to open and continue the upward momentum, triggering us into the trade, and then taking us further up is the goal. So that's the entry price, and it is plus 3 pips above the high. So we're looking for the high, and we're looking for plus 3 pips, and that's where our entry order will be. Alan, I don't quite understand your question. Does the 50 EMA have to be above 100? Yes, that's very important for this particular strategy. The different moving averages represent actually represent trend on different time frames. So ideal case scenario is that we have this order of moving averages. The 50 moving average is above the 100 period moving average, and the 20 moving average is above the 50 period. So that should be the ideal order of the moving averages, should be represented like that. Yes, everything that we're doing here is tested on a daily time frame. Everything that we're doing here is tested on a daily time frame. So please do note that. That is basically what we have tested this on. That's what we feel confident to trade this on. However, as I said a little earlier, this is concept driven. Concept driven basically means that you're looking for this as a concept to work actually in any market, any time frame. But it's very strongly recommended to test it very methodologically, using the elements of the Trade Essentials kit is a superb way of doing this. Test it methodologically, draw up your crib sheet, use the template in the Trade Essentials kit, use the journal in the Trade Essentials kit, and identify if it will work on a 4-hour chart, and then trade it. You know, get yourself at least 20 trades per currency on a 4-hour chart, and ask yourself the question: is it something that's going to work on this time frame? And then you'll get the answer very quickly, and it will build up your confidence and your conviction in the actual trade strategy that you're using. So that's really important. Okay, good. So let's further progress. So there's some other questions here that are relevant as well. Where do you set the target? I'm going to come to that in just a moment. Are you buying at a price of 117.19? Let's have a look. I don't think so, though. 117.19 high side. Yes, that's right. So normally that's where the entry would be. In this particular case, we didn't take that entry. The reason we didn't take that entry is if we look at the trade risk, distance between stop and entry, it's 200 pips plus. It's actually only a maximum of 200 pips worth of trade risk that you can actually take this particular trade on. So where we tested it, we only tested it on trades which were a maximum of 200 pips of risk. That's the key thing to note. Okay, so because this exceeded 200 pips of risk, what we then did is we drilled down to a 4-hour chart. We drilled down to a 4-hour chart, and we then looked for a 4-hour swing high in the market. So have a look here. If we drill down to a 4-hour dollar-yen chart, and again, the only way that we're really able to do this consistently is purely by looking at the smart money indicator, and that's what is absolutely key and important just here. So what we did is we looked at the dollar Japanese yen on the 4-hour chart. In fact, I just realized that, there we go. We looked at the dollar yen on the 4-hour chart just there, and we said 116.25. This was the point at which we had a confirmation of our 4-hour swing low. And so you can see that's denoted by this white dot just here. Again, all part of the smart money indicators telling us that the 4-hour swing low is confirmed just there, and as a result of the confirmation there, we took the close of this particular bar, which was a 4 a.m. bar on the 6th of January, and we looked at the close of that. The close of that was 116.25, and that's why we then drilled back to the dollar yen daily chart, and we said that we'd use that as a limit order. So what we did is, on the day of the actual trade opportunity, we actually looked at a limit order. We placed, on this particular day, we placed a limit order down here, and then the next day, of course, the price did come down. It filled us into the limit order at 116.25, so that's the level we're long from, with the stop still in the same place at 115.04. Does that make sense to everyone? Punch a Y into the chat box. Okay, so I think most people have got an understanding. Great, that's superb. Okay, so we're going to carry on because I'm conscious that there's quite a few bits to get through before we wrap up today, and I've only actually got 20 minutes left. So that's the short order. The target is calculated by looking at 2 times the trade risk. So if the trade risk, in the case of that dollar yen, let's say for example, is 130 pips, then what we'd look for is we look for 260 pips in between the entry and the target. So we project up for two times the trade risk. The reason that we did that is we found through testing that that result was actually one of the best that we actually obtained. And you can see here, actually you can see here quite clearly that the best target to exit the liftoff 1.0 here was actually 4.5 times the trade risk, but we didn't want to hold the trade for 4.5 times the trade risk, because that psychologically can be a little bit more demanding. So what we then decided to do was we decided to look for a target that was not as close to the original set of results that we got, but still not bad, giving us a 60% net return over 3 years, which was 2%. And that's why we look for 2 times the trade risk. But you can look for 4.5 times as well. That will give you a better set of results, but you need to be comfortable holding that through. So again, everything that I'm talking about here on the liftoff strategy in terms of the rule set, the actual examples, live trading videos, we've got some strategy worksheets that you can actually go through for examples on the liftoff trade. You can see there is presented on the Traders Essentials kit. It will be delivered to you by post in that little blue box just there, and my colleague has put in the link already into the chat box, which is this one just here. So if you would like to make a purchase of that, that's the one thing that I can recommend that will get you going really on the journey. But in the meantime, I'm happy to give out a discount voucher for that very Traders Essentials kit in this interactive exercise, which is exercise number 3, maybe a 2-part question. And I note that we didn't get any complete answers on the last question, so I'll give away 2 prizes to the 2 winners that get both of whom need to get both parts of the question correct in order to qualify. So for a 50% discount voucher to our Traders Essentials kit, delivered on the gold USB key to your door, here is the question. What is the maximum number of bars in between close below and close above the 20 EMA? I did brush over that a lift off. It's only a 1-part question. And we have a couple of answers coming in, which, let's see, who has gotten a correct answer in the shortest space of time. So congratulations to, it looks like most of these answers actually came in exactly the same time. But in order of what's appeared in the chat box, thank you very much for all of your answers, which are still coming in, by the way. We've got more than enough winners at this time, so we don't need any more answers, but thank you for taking part and really getting stuck in there. So congratulations to Ian and Alan. So if you would like to send your I've got people even sending me private messages with the answers as well, which is great. Thanks very much. You're making sure that you get your answer across in every possible way. So Ian and Alan, if you can now send across, you can send it on a message because that only appears to the presenters to answer your question. If you need to send across your email address and a contact number, if you can, and one of my colleagues will pick that up and then make contact with you a little later this morning to issue you that prize. In fact, I can see that Alan is already a prize winner from yesterday, so I will hand that to the next person down that came with the right answer. And as there are so many of them, it's very easy to see and pick out another winner. So congratulations to Tosin. Tosin, you have now won as a result of Alan actually having won a prize just yesterday. So congratulations to both of you for taking part and coming in the fastest. Tosin, if you would like to send us a message with your email address and your contact number, we need both things to be able to qualify. So I understand that Tosin also won a prize yesterday as well. So okay, so then there's a next winner down as well, whose name I can't quite pronounce, but one of my colleagues will send you a private message to let you know just there. So that's brilliant. So we'll be in touch very shortly. Good. Brilliant, good job. So in this presentation, we've shown you some live trading with Real Cash Real Time. In the last couple of hours, we've done that. In fact, I believe that there's a new trade that's now set itself up. We have actually 28 pips away from our target. The dollar Swiss franc is actually currently, and let's actually switch over to that now, as I have completed the bulk of my presentation. We can use the last 15 minutes to answer any questions and just monitor potential trade opportunities that are actually getting themselves nice and close to their target. Now, I appreciate that some of you may have taken some of these trades along with us, and you're not going to have the opportunity to perhaps necessarily manage them with us. If you would like to if you'd like to send across your email address, if you'd like to receive some trade updates for the rest of today for how we're going to be managing these, then you'd be more than welcome. If you'd like to do that, we'll be happy to extend that to you for today. I'm just going to have a look here. We're pulling open the euro dollar, which is making its way down to its target quite nicely here. So we're currently 35 pips away from our trade from from our target on the euro dollar. So if you'd like us to let you know how we're managing these trades for the rest of the day, then you can just drop us a message with your email address, and I'll see to it that one of the team just keeps you in the loop with how that's all happening. Okay, so we can see the euro dollar is proceeding towards its target. Let's switch over to dollar Swiss, and the dollar Swiss is doing something similar as well. Let's go ahead and plot on, because I don't have the levels for the dollar Swiss on my chart. However, the target, I believe, is 1.0229. 1.0229 is the target. That's here. So that's our target there on the dollar against the Swiss franc. That's also broken. You can see the previous 1 hour swing highs as well. And yes, that's very close to hitting its target now. Okay, so it's fantastic, fantastically done, these trades. Not because they're in open profit, which really means nothing at this stage, to be honest, because we've seen so many thousands and thousands of examples in the forex market of trades that we've taken. Some will just continue to run and rally up towards their target. Some can turn around with a split second's notice and move back against us, and there's nothing wrong with that. That's the nature of the beast. So we just follow the plan concisely and exactly. We hold the discipline, and that's how we execute these opportunities. And what you've seen over the last 2 days is, on the first day, us taking some losses, and then on the second day, us with some open winners as we close this session. Now, we'll be happy to tell you how we manage these trade opportunities, but the way that they're looking, we've got some potential to the upside here, so they may very well reach their targets. So I'm happy to take any question at this time. I'm also happy to receive email addresses. My colleague will be picking those up and making a very short email list, which will email you out on pretty much an hourly basis to just say, hey, we've trailed our stop loss to here, just so you can see the trade management in real time. So that's how we're managing those opportunities. So let's see if we can get them down towards their targets. What I'm going to do now is put myself on mute, and I'm going to use the last 14 minutes of our session for any Q&A. Perhaps I've missed a question on the chat. There are probably in excess of 200 messages on the chat, including answers to prizes and questions and all types of things. So if I've missed something, I'm more than happy to answer it. If not, then I'm happy to just take any final Q&A that you may have that's from anything new that we've gone over. Other than that, we'll be looking to wrap the session up very, very shortly. Someone is asking me to, sorry, wasn't able to join earlier. Is it possible you can go over the Euro USD trade opportunity? Yes. Euro US dollar trade opportunity was one that we took. At 8 a.m. we placed the order to open. We placed an entry order at 1.05. Let's have a look here. We placed an entry order at 1.05. Just going back through my trade journal, 1.0546 was our entry order on the actual euro dollar. We actually went short at that level, so 1.0546. That is actually here. So let me draw a quick little line in just to make clear where that is. So 1.0546 is where we were short on the euro US dollar. Triggered into the trade on this bar. Our initial stop loss was above the high of the range. Our trading stop loss is now above the high of this seller bar just here at 1 point. Have a look at where we trailed our stop loss to. We've in fact trailed our stop loss to 1.0564. So that's where we trailed our stop loss to just there at this time. And we're looking to get ourselves down towards a target of 0.8, this price level just here. So this is the key price level that we're looking for our target on just there. So we're looking for a run to that level. We are still around 39 pips, 40 pips away from hitting that. So we just remain patient. 39 pips away from hitting that. We'll just remain patient. We'll continue to trail that and monitor it as we go on into the rest of the morning. If you sent us your email address, then we will keep you updated with trade opportunities. And if not, we will, of course, assess and give you a heads up on what happened into tomorrow's live session as well, where once again, we will be looking to place trades according to the MG 3.0 Pref elite trading strategy here by Vedanta Trading. Master the markets, of course, trading like a master, as we tell you to do, as we do ourselves. This is all happening in real time with research-backed systems. That's the only thing that really gives us the confidence and conviction to trade live in real time and transparently as well. So I'm putting myself on mute. I'll answer any final questions. Other than that, I'll wrap up the session. Just to answer a couple of the questions that are coming in, I'm being asked to go over the Euro-US dollar trade and to understand the reason behind the trade. We're not going to go over that again. I appreciate that you weren't able to join a little earlier in the morning, but just like a trade, your opportunity there was missed. However, the good thing is you have a recording, which Simon has very kindly been archiving for us and will send to you very shortly, so you can watch that back at your own pace, and then just to get an understanding for why we took those trade opportunities. And if you couple that with yesterday's recording, there'll be a very strong understanding behind that. So I'm not going to go over that from scratch. We simply just don't have the time to. So you do need to be there. For our sessions, we give the times for a very specific reason, and the ideal case scenario is to be there for the whole thing. However, I appreciate that circumstances may prevent you from doing so. Thank you so much. Great info. It's great to have you all on board. Thank you very much to all of you for being here. Okay, Euro USD chart, is it on an hourly or a daily? We always trade the hourly chart on an intraday time frame. So everything that you're seeing here is on an hourly time frame. How to use the short line, the red, the blue. Again, you need to watch the recordings from today's session and yesterday's session, where we've gone over in detail how and why we formulated this price map and what all of the different things actually mean. You're going to need to watch the recordings just there. Not going to go over that again, but that is fully explained already. Okay, someone's asked a really great question here. It says, how would you deal with the problem if your target's not hit? Are you waiting for stop loss orders to get hit? It's a really great and a very relevant question, because not in all cases does your target actually get hit. Again, there is between a 12 and 15 page quantified plan that actually answers that for us in a great deal of depth, because every single parameter here has been tested meticulously and thoroughly with multiple permutations. And so we're able to assess when and where the momentum will stop if we feel that that's happening according to a mathematical algorithm. So we'll know either to remove the trade at the current market price, or if we need to wait for it to hit a trailing stop as well, then we'll wait for it to do that. But again, that will be decided not by pure gut feel or by intuition, or supposedly by sort of having a feel of what's going to happen, or guessing. That's done mathematically, and we'll be able to answer that question as we get more information as the market progresses throughout the day. But again, those of you that have provided us with your email address will receive updates on the hour in terms of how we've managed, or if there is no update, then it means that we've just left things as they are. And so either that's going to hit its target, or it's going to hit a trailing stop loss, or we're going to exit it at a market price. But again, once the market provides us more information, we'll have the relevant parameters in place to be able to assess what to do with that. Okay, it doesn't look like there are any further questions coming in. So the only thing left for me to say then really is if you want to be able to replicate what we're doing with the level of confidence, clarity, and quantification with which we've done it, you do need to click onto the Traders Essentials Kit site and pick yourself up one of these Traders Essentials kits. I have access to be able to do that. Just here, if you click onto that, you click the blue button, it will take you over to an order form, and you can actually pick one of these up. So do that, because it's a superb set of tools which will help you to get going on the actual markets. There we go. Is this technical book you're recommending Kaufman's book, his latest book, The Guide to Successful Algorithmic Trading? Okay, that is an answer coming for you there from Tiru. Oh, you've answered it already. Okay, fine. So that question has already been answered. Thank you very much to Tiru for putting that through. Please can you send us updates for the Euro? Yes, absolutely. Send us across your email address. Are the pairs you're trading the 6 cable Euro USD? Or are there other pairs on your crib sheet? Again, the pairs that we trade for this are limited to the ones that you're seeing in the live trading analysis over here, but not to say that those are the best pairs or that there aren't other pairs. What you're looking at actually is what we class as a Vedanta elite strategy, and so we have got other instruments on which we're running this. But of course, we'll disclose that and discuss that at a more suitable time, perhaps on a one-to-one basis would be better. Would you remove trades if there is big news affecting the trade? Again, that's all in a quantified plan, and depending on the feedback that the market gives us, the answer can vary. It depends whether the trade has triggered or whether it hasn't triggered. If it has triggered, normally we'll let it run through the news. If it hasn't triggered, then of course we'll wait for the news to come out. But again, there's lots of permutations inside that as well. The GBP USD order, should we cancel it or leave it? We'll provide you trade updates as we move through the morning. So if we haven't said anything otherwise, then there's nothing to do on that. Leave it as is. Thank you for all the info and the learning, guys. Yes, absolutely. Thank you very much to all of you for making it all happen. If Simon's about, I'll happily hand it back to him to close if he'd like to. Otherwise, I will do so by saying thank you very much to all of you for being here. Until the next time, stay disciplined, follow your plan, and trade like a master. Bye for now.
Rishi, thank you very much. It is Simon here. Thank you to you and to again for a second day on the markets, sharing everything like that with us. So it's been great. Thank you very much, and we'll look forward to tomorrow's event, where the final day tomorrow, same time, 7:30.